Delhi, and several other parts of the country. And to give you a brief about Elets. Elets is an organization which was founded in the year 2005. Um, and the agenda of Elets is to create awareness about ICT innovations in the various sectors of human development. We operate in the sectors of the BFSI sector. We operate in the governance sector, working with the governments in a very, very deep way, close way. We operate in the education sector, and we operate in the health sector. And we also work in the several related sectors. So Elets has organized in last 18, 19 years around more than 1,000 conferences across more than like 75 cities across India, from Srinagar to Trivandrum, from Mizoram to Jalandhar to Amritsar, and to smaller cities, even in like places like Jabalpur, Kanpur, or like you can name Nasik, and to everywhere else. And the question is that why this event? Lot has happened, and lot is happening in the BFSI sector, the banking and finance sector in the country, and the NBFC sector is one of the foremost sector, which is pillar of the Indian economy. Uh, when this COVID-19 situation happened, a lot of changes in the economic structure, economic ecosystem happened. A lot of disruptions happened, and these were the NBFCs which were supporting the overall economy of the country. And in this situation, the IT has played an important role in development of the overall sector and providing credit and other financial services to the people when everyone was locked up at homes. There was a lockdown in the whole country, but still the financial system was running because of IT. And so much IT deployment has happened in last 2.5 years. Like it's almost like whatever had to happen in 5 years has happened in 2 years. So we are going to like deliberate on the ICT based innovations in this program today. And we are having several leaders of this NBFC sector from especially from South India who are here, and a lot of industry partners are here with us. Let me thank our partners. We are our powered by partner is Spokto. Our gold partner is Kaspersky and 3i Infotech. Our digital customer experience partners are Quality Kiosk and Elastic. Digital excellence partner is Connect and Digital. Loan collection transformation partner is Credigenics. Our data center partner is Control-S. Our strategic partner is Rapideer. Our voice AI partner is Skit AI. Our sales enable partner is SharpSell. Our associate partner is Credit Nirvana. Our collection AI partner is Sarthi.ai. And our exhibitors are Scientific, Perfoyos, CMS. Our exhibitors are ICRA, and Newsoft, Numetric. Our host partner is Sadhan. Our co-host partner is FIDC, and our supporting partners are Upma and M5. So, without much ado, let me invite our esteemed dignitaries on the dais to light the lamp. And we have with us Mr. Ravindra Babu, who is the Managing Director of Ashirwad Microfinance Limited. May I invite you on the stage? Let's welcome him with a round of applause. Ashirwad Microfinance is like one of the biggest microfinance organizations in the country, with assets of around 7,000 crores turnover. Let me invite Mr. Arun Gantayat, who is the pre-sales manager of Kaspersky South Asia, on the stage, please. Arun, welcome on the stage. Let me invite Mr. Kalpana Shankar, Managing Director of Bellstar Microfinance Limited. Madam Kalpana ji, welcome on the stage. And anyone else? No. So I request the dignitaries to, first of all, we can light the lamp on the stage and we can start the program with that.
I would also request Mr. Sanjeev Nair, Chief Technology Officer, Conquest Connect Digital, to kindly climb up the stage for the lamp lighting.
गणनायकाय गणदैवताय गणाध्यक्षाय धीमहि गुणशरीराय गुणमण्डिताय गुणेशानाय धीमहि गुणातीताय गुणाधीशाय गुणप्रविष्टाय धीमहि एकदन्ताय वक्रतुण्डाय
I would also request Mr. Bhavin Parekh, Chief Business Officer, to kindly climb up the stage for lighting the lamp.
श्री गणेशाय धीमहि गानचतुराय गानप्राणाय गानान्तरात्मने गानोत्सुकाय गानमत्ताय गानोत्सुकमनसे गुरुपूजिताय गुरुदैवताय गुरुकुलस्थायिने गुरुविक्रमाय गुह्यप्रवराय गुरवे गुणगुरवे गुरुदैत्यकलक्षेत्रे गुरुधर्मसदाराध्याय गुरुपुत्रपरित्रात्रे गुरुपाखण्डखण्डकाय गीतसाराय गीततत्त्वाय गीतगोत्राय धीमहि गूढगुल्फाय गन्धमत्ताय गोजयप्रदाय धीमहि गुणातीताय गुणाधीशाय गुणप्रविष्टाय धीमहि एकदन्ताय वक्रतुण्डाय
Thank you so much, and I request all the dignitaries to kindly have your seats on the stage, please. I once again welcome all the ladies and gentlemen present here. I thank all our sponsors, and I thank each and everyone for marking your presence here. I request all the dignitaries to kindly take back your seats and remain on the stage. Thank you. After making a major impact in its earlier endeavors, NBFC100 Tech Summit is now unveiling its 11th edition in Chennai. The conclave is bringing various stakeholders, technology partners, and policymakers on the changing dynamics of the financial sector and project the role of NBFCs in ensuring the same. With this short note, may I request Dr. Ravi Gupta, founder and CEO of Elets Technomedia and editor-in-chief the Banking and Finance Post, to talk about the magazine, the Banking and Finance Post magazine, which is India's first and the only magazine on innovations in the BFSI sector. Please, sir.
Thank you, all the esteemed dignitaries on the dais. We are honored to have you all here. And we are going to unveil the latest issue of the Banking and Finance Post magazine, which is India's first and the only magazine focusing on the BFSI innovations through ICT. IT is playing a dramatic role in changing the BFSI overall ecosystem, including the NBFC ecosystem. It is empowering not only the NBFCs, but also empowering the customers. So we have the chairman of RBI Services board on the cover of our latest issue, and we are going to highlight several other industry players and NBFC players in our future issues of magazine. So I request all our esteemed dignitaries on the dais to launch this special issue uh, from your esteemed stage. Yeah. So requesting you.
Thank you, dignitaries, for joining us in the launch of the Banking and Finance Post magazine. Thank you so much once again. Thank you. Moving ahead, may I request Mr. B.N. Ravindra Babu, Managing Director, Ashirwad Microfinance Limited, to kindly render the keynote address on the role of digitalization and microfinance.
Let us welcome Mr. Ravindra Babu with a round of applause, a big round of applause. As you all know that Ashirwad Microfinance, which he's heading, is one of the topmost microfinance organizations in India with around 7,000 crores in dispersal. And their role in this sector is massive. So it is an honor to listen to him. Thank you, sir.
Thank you, Mr. Ravi Gupta. Respected CEO of Elets, Mr. Ravi Gupta, other dignitaries of the light, and invitees. A very good morning to all of you. You know, after the COVID pandemic, the industry, actually the microfinance industry is hardly affected and just reviving slowly to the prime place. And at this juncture, I have to go through small points which is to be taken care, or which we experienced, or we are going to experience, etc. A small attention to the August audience. You may notice that RBI has increased the repo rate by 50 basis points last week, bringing the repo rate to 4.9%. This is the second hike in this fiscal year, which was 40 basis points last week. However, the current rate is still below the pre-pandemic level of 5.5% in February 2020. Maybe this is the way we take is the comfort. That's all. Naturally, the cost of borrowing is going up. Already it's happened 1.5% in the market, and it is going to skew your margins. There is a hope for reduction in credit cost due to higher provision done in last 2 years. Healthy business growth is envisaged due to higher consumption growth in post-pandemic recovery across manufacturing and service industry. It is expected credit growth to grow to 11 to 12% for NBFCs during this year. I'm bringing certain concerns, regulatory concerns mainly, which is going to be executed within short time, and the importance of technology coming there. One is the scale-based regulation, base, middle, upper, and top layers classification and control, which is going to be effective from 1st of October. Risk-based internal audit, started already from April 22. RBI's asset classification provisioning will come into effective from 1st of October. NPA management, especially for small companies, is going to make a big issue one from effective 1st of October, because this was extended 2 times and now this September 30 is the last date. Because the NPA previously called, they used to collect one installment bring it to the standard is that is not going to end, and unless they clear the full overdues, they cannot come back to the standard assets. So these are the important facts, and I'm emphasizing here, all these are possible with a clear technology. Otherwise, we cannot do these things in time. Coming to microfinance industry, India has 6 crores of customers with 3 lakh crores business, out of which microfinance institutions covers 3 crore customers with 1 lakh crore business. This is the size of the microfinance industry, and these are the people in the lower pyramid of the country. Always the government's attempt is to bring these people to the prime level, or at least to enhance their living standards and inclusive growth, what always the government says. This is the area every regulator and the ministries are constantly looking for. As a result, the microfinance industry, they always promote and they give a lot of support from the every level. Even during the COVID time, they extended the moratorium facilities just like any other companies and NBFCs. Without they refunded the overdue interest, etc. There's a lot of help was done. And recently, the RBI has redefined the microfinance industry, which is in last the 14th of March, RBI issued circular redefining the microfinance industry, which is effective from 1st of April. This is a change. It's a complete changing the face of microfinance industry. And any microfinance company dispersing loan without collateral, sorry, not microfinance company, any finance company dispersing loan without collateral for a family with less than 1 lakh income is a microfinance. So it is not only limited to microfinance institutions, it is limited to all the finance institutions. Is coming under microfinance. The old model of JLG or SHG is emerging to individual loan model, thereby upgrading, migrating the customer to the next level. Hence, the scope of MFI is not only the JLG, old JLG model, but also the individual model for seasoned customers. As for example, we have been giving the loans to small people. If they have a small shop, they can now, the facility is enabling, they are now enabling with a higher level of loan amount for longer term. The amount of loan is not fixed now. The period also is withdrawn. So you can give even 5 lakhs rupees to a small player in the society without collateral. Without collateral is the basis. So a person who is, running a taxi, we can give him a 3 lakh or 4 lakh rupees to buy a second-hand vehicle and do his work. And he can upgrade his business, his job, his income. Only the condition is that his monthly payout should not be more than 50% of his income. That is, if he has 25,000 rupees income, his maximum payout, inclusive of all banking liabilities, loans, or whatever may be, or already he has a vehicle loan, everything inclusive should not go more than 12.5%. So, yeah, 12,000, 12,500. Now, the important point here is that it comes very struggling atmosphere that how to compute the family income. The poor microfinance people don't know. There is no standard things in the system to get a family income, etc. And the credit bureaus are not also not providing the support as of now to support the income of the common poor people, because everything is in cash manner. They don't have any book, they don't have any source of income to source specifically. There are no income tax, no banking transactions. Such a condition, it's very difficult to assess the income of the customer or the family as a whole. It's not now an individual, it is now the whole family. Another side is what is his total exposure in payment in installments. That also it is not available. It is available with a limited manner, which is or MFIs, it is available from credit bureaus, but other institutions like banks or NBFCs is not clearly available from even from the credit bureau. These are the main key point right now with microfinance facing to do the new business. However, we are getting into the system. We are getting some type of the guidelines from microfinance, MFI, MFIN, and Sadhan. Find out the total, not direct method, indirect method, whether he has a house, whether he has a concrete house or a small hut, or a small, he has a two-wheeler, he has an electricity, he has a phone, he has a, these are the some indirect methods to derive to his income. And of course, he has been a customer with us for a long time, or what is his prompt payment, etc. These are the basic things which we consider for taking his income and expenditure. What I'm coming to say you that without digitalization, MFI business is not going to survive anymore, neither going to achieve a sustainable growth. From the point of identifying center till the loan is disposed, the loan is closed, the renewal or whatever may be, 100% digitalization is possible now. Now the authenticated data is available from dependable sources. What we have to do is to collate all these through API integrations, KYC, as for example, now RBI started to give in principle approval to use eKYC. We also got recently, and we are moving for eKYC straight away from Aadhaar. This can also use for the e-signing. So digitalization becomes more and more comfortable right now. You can have also penny testing through bank verification so that we can ensure that the amount is gone to the customer's person account directly, not through any other mode. Ensure proper credit check and house verification, and ensure that they have gone to the FBOs has gone to the house and verified all details before the dispersal. If we could not do the e-signing, then we can also adopt the uploading of the documents in the system itself. How to compute family income is difficult task, I told you already. Some kind of artificial intelligence, you can use it to get a dependable information. Ensure the loan is disbursed in the account of the customer himself. Reduce the process time and dispersal within 2-3 days. Send SMS to customer for the center meetings well advance and a confirmation of installments received, and if he defaulted, to pay it online. Automate complete center meetings. Track the FPO's movement. Ensure the meeting is done in time. Call continuously the defaulted customers and ask to pay through online. Collection deposits to the bank to be made through proper banking process. There are a lot of facilities now available so that we can ensure that the money, the collected money is deposited by the staff in time, and reconciliation is without anything, because there are easy money, etc., easy pay or something like that we are using for Axis Bank, where internally the system will take care of the crediting the account, cash credit to our account also through API integration. Give the app to the customer so that all details will be visible to him, including the payment he made, the installment details, his debit balance and statement of account, then installment files, which will show nearly which are paid, which date he paid, etc., what are the installments due paid, what is the pre-closure amount, or what are the installment due, etc. And he should be available, it should be available to him for updating his address. For example, the phone number, if it is changed, he should be available to him. All this ensure the transparency and instant information, which will automatically ensure the customer confidence and growth. The HR is another area, very, because microfinance really is a collection business, nothing else. So the HR is very important. People has to go to the place, see the customer, collect the money in time. If you lose 1 hour, you may lose that installment. If you missed one installment, it is very difficult to get into the next time, because it is like that one. They have their options, and then it will get. This is practically what is happening. So if there is a meeting today, in the meeting everybody sit together and pay money, you can collect the money. If you could not come, or if he is not paying, you continuously follow individually and get the money within short time. Otherwise, if it goes to second bucket, you finish with that money. It is true but during COVID, we can see that PAR, which we show in the systems, etc., is very high. Not because he is not paying. He is paying one installment, but he cannot pay the second installment together. So that if there is one installment due, that remains still and closure of the business. The HR is very important there. They have to convince the customer. They have to explain to the customer. They have to teach the customer how this is happening. And HR, we have to put full control and HRP management, and which will automatically link it to the LMS system, loan management system, so that the system will be totally integrated. This system also should be capable to integrate with account module, update the transactions, banking reconciliation, trial balances, integrate with the insurance companies where there is a credit insurance is there. Automatically, it has to go to the insurance company through API integrations. Fully structured report must flow from top to bottom, according to their rights and privileges, which will enable the same information at all levels. A good database can generate the ALM reports and other mandatory reports automatically, that we can make a program so that import information will be available to you in your mobile itself. Low capitalized NBFCs can enhance business through assignments, on-lending, co-lending, etc., provided they adopt a good technology and a strong MIS. The staff should be trained offline and online. Video mode of training is very important. Then because the BFC microfinance industry, the front end people are of the lower level, so we have to give the local language training, and then also in the video mode, so that they will take care of it. Customers' grievances should be addressed in time. Fraud can be identified and mitigated through faster error handling methods. Finding the best IT partner is important, and this is to be cautioned also. This, if it's a wrong person, it is going to destroy your time and energy. Since fast changes are happening, especially from the regulatory side, ensure that your tech partner is capable to service in time. Whatever I mentioned about the technology is already established in Ashirwad Microfinance and running in Oracle Cloud 24/7. With this, I conclude my speech. I am thankful on behalf of MFIN and Sadhan. I thank the organizers for inviting me to this meeting and giving me a small speech. Thank you. Thank you all.
Well, can we all give a huge round of applause once again for the first speaker of the day? Some more energy, some more enthusiasm. Thank you. And with this, may I request Mr. Bhavin Parekh, Chief Business Officer of Spocto, to kindly come up on stage and felicitate B.N. Ravindra Babu with a memento as a token of gratitude and respect. Please, sir. Can we all give a huge round of applause, please? Thank you, sir. Moving on to further, may I request Mr. Arun Gantayat, Pre-Sales Manager, Kaspersky South Asia, to kindly present a topic on building a safer future in finance. Please, sir.
ठीक है Excuse me. Hello. Can you just help me here? Slide changer. Okay. Yes, okay. Good morning, all. Warm welcome to all the delegates. Myself, Arun. Arun Gantayat, working in a capacity as a senior pre-sales manager for Kaspersky Labs for South Asia. So we'll be talking about building a safer future in finance, and mostly we'll be focusing on what are the future technologies we are going to talk, be it fintech or open banking systems or collaborations with machine learning, AI, and all the things like moving to the cloud. So those things we will talk. The trends means whatever is coming in due course. We'll talk about the trends and also what are the threats it comes along with. So those things also we'll discuss little bit in detail. So to start with, the payment evolution, it started from 13th century, and then means we all know that it has grown up exponentially in all sectors, like means be it digitally or heavily tech savvy, with a lot of fintechs coming in and collaborating and contributing to, at large. So with all those details, it also comes with like means lot of its own challenges. As per the report by Boston Research Group, consulting group, so they have done, and finance industries who are dealing with money basically is prone to attack 300% more than like normal industry, be it manufacturing, pharma, or something like that. Keeping that in mind, so when it is growing, it also comes with the cyber criminals. Means cyber criminals also get more interested because the target is high and it is directly connected to money. The cyber criminals also want to do like means all those things, like means on the right side, whatever, be it financial gain or competing activation or maybe insider trading. So all those things happen uh, with the cyber criminals keeping that in mind. And most of the financial motivated cyber crimes, if you see, it is crimeware. And thanks to ransomware, like means everyone knows that, like means earlier it used to just encrypt the data, and now it is like means encrypting and exfiltrating the data and keeping the uh, company as a hostage. So these are the trends which are coming actually. So these are the trends which we are getting in, like be it fintech, the open banking revolutions, where many vendors, like many third-party entities, gets collaborated with each and everyone, and it's open. Like means it is not only with the bank, because of the API integrations, it gets integrated with so many things. And of course, cloud compromises there. Heavily finance sector deals on the cloud because the need of the hour is the how agility and how quickly the solutions can be delivered with a frictionless user experience. And of course, blockchain is there, IoT is there, where like means IoT is getting into the organization, be it from customer side, be it from organization side standpoint. A lot of IoT devices are being used, and majorly the challenge is those devices are being used without the consent of IT security team. So as an organization, the IT security, information security, or IT team, they will not be aware that some kind of like means IoT devices are being used in the inside the organization. That makes the organization completely vulnerable because it is not scrutinized and it is not coming inside the security framework. Then, of course, we talk about regulatory compliances, where like means India is also coming with regulatory compliance, where you need to divulge if any breach has happened, then it has to be uh, publicly disclosed. So those things are also there. So what happens fintech, like means normally it's a vibrant technology, fintech, all sort of startups are coming, financial startups are coming, which leverage the user experience, which leverage the lot of services offering to on top of any finance sector. But what exactly happened? It has not been uh, created when the framework is created. It is not well within the security framework. Means it has not been taken into more consideration towards the security framework. It's just how it is get connected and how well it will be more delivered, but not exactly the security aspect of it. As we are discussing the open banking revolution also, like means what exactly happens is because of the API, open API, it has been anyone can access. When anyone can access, it also can like means uh, little more tech savvy cyber criminals also will have access to those APIs, and it can be manipulated for financial gain or disrupting the whole ecosystem. Then we talk about cloud. Cloud compromise, yes, it is a boon to all the sectors, especially the financial sector, giving a frictionless user experience. But what exactly happens is the cloud framework, it is not completely like not adequately secured by the network and cloud threats. It can like means, if it is hosted, then if it as well the neighbor uh, hosting, it can be if it is a tech savvy attacker targeted at an adversaries, then they can easily crawl through the network also. And then we talk about IoT, as we are discussing, like means now if you see, earlier it was only cash, then credit card payment systems have come, plastic money. Then now it is like means you can pay using wearables also, like watch, smartwatch or smart eyewear, or any kind of thing. Like means it is, you can pay, as the slide says, you can pay using your sneakers also. So those kind of things are also getting in, and from the customer side and from the user side, digital transformation is there, and the fear of new cyber threats delaying digital transformation. The way it should grow, India, of course, is taking the advantage, having a in 2021 financial year, India, we have done like 44 billion transactions actually in a year, digital payments. India, of course, it is front running the entire world, but still, like means more, the digital disruption, what supposed to happen, it is like means lacking in across the globe because of the challenges, like means what we see. Blockchain, now it is the talk of the town. Like means everyone is getting into this blockchain thing, and India is also contemplating on getting a blockchain, like means cryptocurrency regulations. In this, what exactly happened, like means decentralized autonomous organizations, so DAO, it can be like means that if the attackers are tech savvy, which eventually it will happen, so that can be also manipulated, and DAO can be leveraged to do a complete like siphoning and money laundering across the accounts. Then we talk about machine learning. So yes, machine learning and AI, everyone is talking about machine learning and AI for the betterment of usage. Like means everyone is talking how the human intervention can be reduced drastically. So those things are there, but still it comes like means increasing evasive malwares. Like means it gets prone to the increasing evasive malwares, and advanced spear phishing attacks also will be part of it, where it will be handcrafted. Now it is like little bit more tools are being used, but it can be handcrafted, and a spear phishing mail can be do disruption to any organizations. Then of course regulatory challenges, like means being it is digitally, it is growing exponentially. It also comes with uh, compliances from across the globe, like GDPR is there, PCI DSS is there, uh, not related to this, but HIPAA is also there, and NIST framework is there. And also India is looking at like means regulatory compliances, where the data protection bill will be in place. And then yeah, means the penalty will be directly impacting to any finance institute. So we are talking about like means 8 points. We have talked about what are the trends are happening in future, so what will be happening in the future. But in the meantime, we also talk about like means how Kaspersky as a company, the solutions has been put in a staged manner, so which will fit any organizations depending on their expertise. When I say depending on their expertise, we have staged approach. So first is to start with security foundation is there. Security foundation, which talks about like means uh, protecting the very niche endpoint, the data and cloud. hybrid cloud. If anything is in when it is hosted on the cloud, then cloud hybrid cloud security will able to protect those cloud workload, be it public or private cloud workload. It can be protected. And then we have embedded system security, which is apt for ATM and POS, like means point of sales or ATM. It can be integrated, it can get installed, and of course, means it will be running with some legacy operating system, but we are fully compliant with those operating systems. And with that, we give like means complete protection. And what other things are there, we'll also discuss. And basically, so this the foundation level, even though it is like address 90% of the commodity threats of entire threat landscape, it can address the endpoint, the pain areas in endpoint network, and the data. So if any organization is using any NAS storage, so we have out of the box integration through various protocols, ICAP, RPC, those protocols, we have various integration, and directly it can protect the NAS storage also. We have certain features like means anti-cryptor, which can be like means blocking the ransomware encryption. So when the encryption happens from an endpoint standpoint, and it is starts encrypting your storage devices, it can block the communication, it can drop the communication from the endpoint, and it can decrypt the already encrypted files. So that's a very unique features what we have. And it can be, of course it is there in endpoint and server, but also it extends to the NAS storage also. So that is a very unique thing. And of course we address the entry points, various entry points like email and web gateway. We have web security and email security. It can be installed on gateway or on the server also. Even though this is addressing 90% of all the attacks vectors, actually, means when we talk about threat landscape, it can address like advanced attacks and all those things. And it can be still managed with a small IT team. So no heavy expertise required in cybersecurity to manage all these products. And it can cater up to 90% protection of all threats. Then moving forward, like in stage two, what we have optimum framework. When we talk about optimum framework, then it is again addressing another 9.9%. So out of 100%, 90% can be addressed with commodity and advanced tech. In optimum framework, like means where we have Kaspersky Sandbox is there, EDR Optimum is there, which is heavily again built on security framework, where of course a little bit of uh, IT security expertise will be required from any organizations, because when it comes to 9.9% of the threat landscape, also the organization maturity will be required to deal with those areas. But nevertheless, like means endpoint detection and response is heavily automated. So automated EDR is there. So it will not burn out any organization's time in investigating and analyzing. Of course, it will give you root cause analysis and entry point, what exactly has happened. Complete details it will give, but on top of that, it will not burn out the time of any information security team or IT team. Then we have a very unique offering, Kaspersky Security Awareness, which is KASP, which is Kaspersky Automated Security Awareness Platform, which deals with educating the employees. Like means all we know, like means any organization is safe as the as educated as the user. The last user, that is the like means you can have n number of prevention rules, next gen firewall, you can have SIM encryption, DLP, lot of things will be there, but the user is still the highest. Like means it has been calculated that like means 83% of the attack happens because of a user, because you cannot manipulate a machine or a prevention module, but you can always manipulate the user. So user is at the like means any solutions you take, users is still a big greater challenge, be it like means insider threat, or be it is like means no voice user who gets fall prey to any simple phishing mails. So we have Kaspersky security awareness platform, where it will intuitively it will give like means it's a video and intuitive scenario where the employees of any organization, of your organization, will get trained on the subject, like means how to understand a phishing mail, how to understand how to use a better password hygienes, phishing, how to understand phishing mail, web hygiene, all those things. Like there are 13 modules actually, and spread across beginner, intermediate, and uh, advanced. So along with that, what exactly happens, it along with that it also comes with a test. So certification you can do, you can as an organization you can track what exactly is happening, and which user is getting like means their competencies actually. And also on top of that, it will give you an opportunity to do a simulated phishing attack with your logo, mail content, everything you can configure from your side. It's open, it can be integrated with your learning management portal, or it can be individually independently work also. So those both the things, it can be integrated, and it can be done. Then moving forward to the expert security framework, where like means this will on the top stage 3, it is basically meant for the matured organizations, where there is a SOC team is in place, where uh, at least IT security analysts are there, information security team, dedicated team is there. So in those areas we have various product offerings, like means we have threat intelligence, we have EDR expert, extended detection and response, and various service offerings, like means pen testing, red teaming. We do application assessment. We also take care of complete end to end financial sector, payment system, ATM kiosk, everything end to end. Security assessment also we do, industry specific of course. So for financial sectors we do directly. And one more thing, like means we also have targeted solutions apart from all this, like stage, foundation, optimum, and expert framework. We also have targeted solutions where we have industry specific for IoT, industrial cybersecurity. All it's there, but related, which is more relevant for you as an finance industry, NBFC. Is Kaspersky fraud prevention. So Kaspersky fraud prevention is a completely out and out fraud prevention module, which can be integrated via web or mobile channel, and it can reduce cost of two-factor authentication. It does a continuous authentication, which means like how the all the lexicalities of an user, how they have logged in, where they have logged in. Even it can sense the pressure of fingerprint also. So when they are entering, like means logging in using the fingerprint scanner, like in mobile applications, right, for banking sectors. So it can understand what is the pressure also, and it can understand what are other applications are running. Whether for web application, when the user is accessing web engine, like means through a browser, it can completely check like means whether any iframes are running, or whether tor browser is being used. And a lot of things are there actually, means it is heavily built on ML and AI. So it can understand um, a genuine user from a fraudulent user, or like means if any account takeover has happened, or a new account has been registered, with all those things. So it can completely detect the fraud. And there are two modules there, like means automatic authentications, where instead of like giving an OTP or sending a keyword, the multi-factor authentication what banks normally use, finance sector. So those things, it can be like means it can be reduced. And what will happen, it will be a continuous authentication. So how, if the user has logged in also, where what is the typing speed, how normally the user normally navigates, and if the navigation is something different, means for an example, like means if the user is just logging in and normally he used to go and see the mini statement or the account balance, whether it has changed, and immediately he is going to something like means understanding the third party transfers or cards anywhere else if it is going. So all the lexicalities will be covered, and it can be integrated in the as a mobile SDK for any applications, or also for any web application also through JavaScript it can get integrated. So this will be more focused on financial sector. So these are the targeted solutions. We have already discussed about Kaspersky fraud detection. We also have Kaspersky DDoS protection, where it can like up to 2 Gbps of DDoS attack, it can be prevented. And payment system security assessment, end to end, whatever things are there, like means all those things will be covered, and we will certify that means all the payment system and everything is in place and secure, and basically it is under a security framework. Then we have something like Kaspersky Threat Attribution Engine, uh, which is a, like means a result of our 23 years of experience into the threat intelligence. It can attribute if you are prone to any targeted attack, means which has happened already in your organization, then it can check the genotypes and genocodes of that particular attack, and it can say like means what are the APT actors are behind those attacks. So those details also will be shared completely, means say for example blue Narov is there, muddy water, so these are the APT groups are there, and Lazarus is there. So if part of now it is like means in a adversary industries, attacker industries is also happening with amalgamation actually. Means someone does the account, someone does the calling, someone writes the code, someone uh, compromise the codes altogether, and then the payload happens. So if anything has happened to your organization like that, which will be targeted. So with threat attribution engine you can see what exactly has happened and which are the APT attackers are behind the attack. And we also have like Kaspersky Threat Research Sandbox, where it is a completely for a SOC-driven approach. Actually, means where any sample can be run with any operating systems, with any applications installed. It can become configured. Actually, means completely configuration can be done with Kaspersky Research Sandbox. Apart from all those things, we also have a threat intelligence. Maybe I'll be there in the booth, so if you want to have more details on that, then we'll talk how the threat intelligence services or the product will help you or your organizations in protecting to the near real-time protection from all the threats. uh, just to talk about Kaspersky, little bit fact about us. We have 400 million customers, users worldwide, and numbers if you see, like 14 million product activation happens every year, and present on 6 continents and 200 countries and territories we have presence. And this is the like means geography if you see, means we have present in almost all the parts of the world. And one thing I would like to point out is transparency center. So Kaspersky being into the finance industry, so the foremost be it technical whatever it is, the foremost thing is trust, how the customer trusts you. So the similarly, like means in cybersecurity industry, Kaspersky is the only one who has set up a transparency center, global transparency center, uh, in 5 places. Like means to start with Zurich, and then Real Madrid, then Kuala Lumpur, and Canada. So what exactly will happen? Any one of our esteemed customers, if they want to see the code, how it is written, what data is going out, how the update process works, and they can completely, like means of blue keep, they can completely see our code, uh, means while visiting to the transparency center. So if any one of you will be interested in that, then we can definitely talk and arrange for the same. So this is the global initiative we have taken, and so what we have, it should be open to our customers. With that, if you have any questions, I would love to answer them. Thank you. Thank you.
May I now request A. Ramesh Kumar, Chairman and MD, Laraksha Impact Finance Enterprise, to kindly climb up the stage and to felicitate Mr. Arun Gandayat. Yes, please. With a memento as a token of gratitude and respect, please. Thank you. Thank you, sir. We say laughter is the best medicine, the same way clapping activates our brain cells. So if you want to remain active throughout, then let's do the small activity quickly. Laugh together, a little more louder. Laugh, clap, clap. Sir, I'm not able to hear you laughing. How do you do that?
Yeah, next time when you say, definitely. So I was confused.
Ah, there he is. So I think this magic has worked now. Clap, clap, laugh, laugh, clap, clap. I'm not able to hear you. Clap, laugh, laugh. What about the one sitting in the back? There's no reaction. There's no action. Laugh. One last time. Laugh loudly. Clap. Thank you. So with this, let's get back and yeah. NBFCs are in no hurry to convert into bank as the changes happening in the digital world are decentralizing financial services. It is still at the forefront of generating new credit disbursements for the country's underprivileged retail and MSME markets. So, may I request the panelist and the moderator, Mr. Arun Subramanian, co founder and Chief Business Officer, Charspil, to kindly climb up the stage. Talking about Mr. Arun sir, he is the co-founder and chief business officer at Sharspil, an inventor, traveler, and a technology maven. Arun draws his energy from understanding the pain points of clients and bringing data-driven insights to overcome them. Arun holds a bachelor degree in mechanical engineering as well as an MBA from IIM Ahmedabad. Welcome, sir. And may I request the other panelists to kindly climb up the stage, starting with Kalpana Shankar, Managing Director, Bellstar Microfinance Limited, Mr. Ajay Thomas, Chief Digital Officer, Shriram Capital. May I request all the panelists to climb up the stage. Also, may I request Mr. Abhijit Ray, Co-founder and Managing Director, UC Inclusive Credit Private Limited, Mr. A. Ramesh Kumar, Chairman and MD, Laraksha Impact Finance Enterprise, to kindly climb up the stage. And for the members sitting here, we would be having the panel discussion on the topic Tomorrow's NBFC, Rethinking Strategies for a New World. And may I request the moderator to kindly start with. I welcome our moderator of this panel discussion, Mr. Arun Subramanian, to kindly begin with.
Check. Okay, good morning, everyone. Am I audible at the back? Okay, excellent. So, very glad to be present in amazing company here. I think we have people representing all walks of NBFC, and amidst this, we also have a nuclear physics scientist. Guess who it is? Okay. So so I think that's been quite a journey for ma'am, from nuclear physics to NBFC. So we'll talk about that as well. So, so the idea here in this conversation that we want to have is to really get a little deeper into looking at what is happening in NBFC from the perspective of all of us sitting here, and also to talk a little bit more about the genesis of where it started from, because the journey is as important as the destination. So, so one of the things that we want to try and do here is to keep it as conversational as possible. So we had, initially before getting into this panel, we had a few discussions, where we spoke about what we could, what we could focus on, what we could talk about. But I think what we realized was that instead of having it as a question and answer where we direct questions to everybody, it's going to be better if we can have a conversation that we can, build on top of from each other. So maybe I'll just start off this question, with talking about how, each of us see the emergence of NBFCs from where we, in India, when we started with traditional banking being the core source of funds, to different kinds of people. And to borrow from Ajay, I think we're talking about the different segments of Bharat, because the needs of funds, the way you're looking at money is different for different kinds of people. So maybe if we can just start off with our own perspectives from the journeys that we have kind of shared in terms of how we see the emergence happening, and what do we see as the roles of banks today? Because NBFCs have gone a long way in catering to the financial needs of different stakeholders here. So maybe if we can just start off with that, maybe Kalpana, we'll start with you.
Good morning, everyone. Very pleased to be here today. And looking back, why NBFC, MFIs, and NBFCs are actually lending to the bottom of the pyramid. I've been associated with this sector for nearly 25 years. Basically, I feel small ticket loans are not very cost effective for the banks. So there had to be a new player who could take care of it. And we had a powerful SHG linkage program, but it was very successful in building the social collateral, but in terms of appraising individual clients, it was not successful. That was also another reason why NBFC MFIs became very relevant. And basically, when you talk about NBFC MFIs, only 5 things come to my mind. One, NBFCs have a very agile workforce. The business model is adapted in terms of assessing the household income of the low income group, and collection is very proactive. It's happening at the field level, robust collection systems. Underwriting is also like banks could not cope with the NBFC MFIs in terms of underwriting of these low income group clients. And last but not least, technology played a very pivotal role. That's why all the NBFC MFIs could scale up and serve effectively at the bottom of the pyramid. Now it has become an important player in financial inclusion space.
Thank you. Yes, Mr. Ramesh.
Good morning, everyone, and my compliments to Elets for conducting this flagship event, NBFC100, which they've been continuing over many years, and which is really a good learning and knowledge sharing platform. I'm A. Ramesh Kumar. I was a career banker. I was a chief general manager with State Bank of India with more than 3 decades of banking experience. Then I moved into the NBFC sector. I founded a housing microfinance company, then then a small MFI through a trust, and now another NBFC. So I have a varied journey. So I've seen this financial lending activity from different perspectives and different sides. Banks, where I had the longest career, they have their own strengths and weaknesses. When we look at the underserved segment or the scattered clients or the rural and clients more distant from brick and mortar branches, they are at a disadvantage. They have issues relating to rigidly structured products which are not customized for each individual geography or subsegment. They have very rigid credit assessment procedures which ensure that most of these underserved segments or the newly emerging aspirational segments fall outside their credit process, appraisal and selection process. They also have high cost structures which make it very difficult for them to reach out to the hinterland and service the more remote and the smaller ticket customers. So when we look at the other side, the HFCs, the NBFCs, and particularly the MFIs, they are more focused on the segments where they are working. They are able to customize their products, innovate products to suit the client needs which are emerging from the bottom up. They are able to have lower cost feet on the ground to be able to service cost effectively the small ticket loans. And they are able to also collect more efficiently because they are at the grassroots in touch with the clientele. Now a new dimension has come in with a lot of technology adoption. When it comes to technology adoption, again, if you look at the banks, they have good core banking technologies, no doubt, core banking platforms, but they are not very nimble at adapting new variations, new innovations in technology and quickly adapt them to their products and services. While the NBFCs, being smaller, more focused, are able to quickly adapt to new technologies, new innovations which are happening and use them effectively, whether it is AI, whether it is business analytics, whether it is machine learning. They are able to look at these with excitement and also try to adapt in a cost-effective manner. So these really distinguish it, and because of these, the NBFCs, the MFIs, even the housing finance companies, they are having a natural advantage as far as the last mile connectivity and last mile delivery is concerned. And with the new fintechs being added on, I think they are now becoming an indispensable part of the financial ecosystem and will continue to grow and strengthen from here on.
Sure. Thank you, Mr. Ramesh. So before I go to Abhijit, I think I'll want Abhijit to stretch on, stress on another underserved segment, at least in my opinion, which is a lot of up and budding startups, especially in the service space. Because as somebody who's founded a company, I think I've kind of gone to banks, and the first question they would ask is, okay, so what collateral do you have? And for a company which is working on digital products or services, I think that's like a big bummer to start with, because the only collateral you would have is if you have your own house or, a personal asset and not really a company asset. So maybe Abhijit, I'll leave this to you to talk about how you work with, startups, and as an investment banker, how do you see this progressing for this side of the audience?
No, thank you, and amazing insights from both the veteran bankers. I think one from the grassroots level, ma'am, comes through that, and Mr. Kumar is known for his banking leadership over the years. So before answering your question, Arun, I want to highlight a few things which, just to add on to what both of them said. Now think of it, where were we in the early 70s and how things are evolving. We went from a class banking to mass banking. That's how priority sector came in, right? We pushed credit, still it didn't go, okay? The next level, we said that, can we do a doorstep delivery? People told us that poor cannot pay back. And microfinance has turned the entire theory upside down, saying yes, poor can pay back if you do a doorstep delivery. So doorstep delivery was earlier considered non-existent, non-viable. You can't go and deliver at a cost. But again, India being the most cost-effective economy, and I don't know you know this, microfinance interest across the globe varies between 40% and 100%. We are at a 26 to came down to 22 today. That's the efficiency we have built in. So what we proved again wrong is that doorstep delivery can be given, can be done, and that to profitability with profitable numbers. And we have listed companies and they are doing well. So there is a lot of proof to say that it has worked well. What is the next step then? The next step, what is happening is now again the credit is being democratized. We are reaching out to people through the apps. Again, it's a doorstep delivery. There is nobody coming literally to your home, but ultimately the app reaches your home, your hand, your palm, and then you are trying to get credit. So I think the things are changing super fast, absolutely super fast. We are going through an amazing transformation on the technology front, led by people like Arun and many others. And this is going to continue. What is changing? From a bank, we were trying to get into a bit of technology to make our operations better. From that, we went to fintech. Now things are changing. Fintech is already a 10-year journey. Now we are saying techfin. What does it mean? We'll make technology to work for finance in a way where everything is through tech. The concept changing from fintech to techfin now. So like, you will find a lot of people, they don't deliver credit. They give the entire platform, like say a Credit Vidya. Even the entire platform for credit, that techfin. So this is the next move which is going to happen to democratize credit in a much larger manner. And, I don't know, about, how the e-commerce is changing. Tremendously changing. I don't know, about ONDC, the open network for, digital, commerce. So that is going to revolutionize. And you won't believe which Amazon and Flipkart were considered to be the ones who dominate this. They are becoming member of ONDC. What does it mean? You have to be open. You can't keep things closed door. The entire economy is opening up. Entire processes are opening up. Yes, there will be class services like Apple phone, which will still have a closed door network. But see the growth of Android. Where are we reaching? We are reaching every door, every nook and corner, because it's open. So the concept of open is coming up in a massive manner, and we'll have to adjust to it. ONDC is going to change the landscape of e-commerce. And nobody, I'm telling you, nobody has an option. See, if you look at banks started with apps, their own apps, so that is SBI, Yes Bank, HDFC, everyone. In comes UPI. Banks thought that we are the king. We'll be able to dominate. Where is their uses of their own APIs? Came down to, sorry, own apps. It came down to 4%, 5% for HDFC, for SBI. So again, UPI opened up, it democratized payments. Yes, you have to be efficient to work in India. You can't have the margins what you have globally. But I think that's the country we live in. That's the mass market we have, and we have to adjust. And this is the change scenario we are seeing today. Now, coming back to Arun's question, why I wanted to add this dimension, because this is the change I am seeing. I have the privilege of working in a bank. I have the privilege of running an investment bank for the last 14 years now, which raises capital. And I am now having a privilege of running an NBFC, which lends to early stage companies. So what I'm seeing here is what I'm sharing. I'm also learning in the process every day. So coming to Arun's question, yes, the things are changing. As the app is coming to your doorstep to give you credit, BNPL is available just with a click. Similarly, I think many companies are coming up to say, hey, forget collateral, focus on the business, focus on the promoter, focus on the management. If the business has is strong enough, take the risk. And that's what probably we are doing as one of the players. There are many others who are coming up. Early stage funding, and Touchwood last 3 years has been an amazing journey. We would have supported 115 companies. These were 720 crores, and we don't give big loans. It's between 1 and 5 crore to the companies. And most of the companies performed really well. So this is a new thing wherein we are coming up with collateral less, but to corporates, because most of the corporates don't get early stage funding from banks. But we thought that we'll try this out because we understand a bit of equity. And this is a trend which will continue. You see the emergence of venture debt, how quickly they are growing in the market. That is also a case where you can very clearly say it's an uncollateralized loan, right, to corporates. And this is going to grow because most of the corporates are, new generation corporates are promoted by professionals who are either may or may not have enough collateral to offer, or they will not be open to offer the personal properties for the businesses which they are professionally building. Thank you.
Thanks, Abhijit. So I think whatever we're discussing now, right, in terms of saying how did it start from banks to, NBFCs, which still lend to the, with the top segment of the market, and then we start about other NBFCs are lending. You'll see that Ajay's professional journey mimics exactly that. I think he started with the bank, then worked with, Bank Bazaar, if I'm right. Then worked with Bajaj Finserv, now with Sriram. So how have you seen this journey progress, both from an industry perspective as well as a personal? Because you've actually been in each of the segments in the last 20 years.
So I'll put this answer in a very simple nutshell, right? I mean, why does NBFCs continue to grow, and why does it continue to dominate? That's the question, right? I mean, if you want to put it in a simple answer, is the ability to innovate. And that's something which most of the NBFCs are today looking upon. Now, I represent a group which is 48 years old. It established in 1974. We are 48 years old. And the best thing about it is that what am I bringing into this system? I'm bringing in fintech, right? When I talk about fintech, I'm a large size fintech. We are running at profits. We are 75,000 employees strong, and we are 48 years old. That's the vintage we bring into the group. And what are we trying to do? We are trying to break legacy systems which have been built over years. We are trying to break problems which used to work earlier. We are trying to reinvent processes. We are trying to break anything and everything which used to work for us and reinvent how things are going. Now, coming back to the question, right? Across my entire professional stint, when I go from a company to company and when I see how companies have evolved, some have been ahead of time, some have been catching up, some have been, doing some phenomenal initiatives in terms of how this entire group needs to function in terms of transforming each company digitally. Now, what I've seen is that the core DNA of every company is that how do I look at making rapid change and how can I make it paperless? How can I make it TAT friendly to a customer so that, we are able to deliver on service at a faster TAT and deliver whatever we promise to our customers. That's exactly what every motto of the customer, motto to the customer from the organization is. Now, when we talk about every single area, NBFCs are also operational in multiple segments. Like one of the points which we mentioned this morning was about how India is divided into 5 different Bharats, right? It's not just one country. We find a lot of dynamism within our country, right? We see segments which is right there up market. Let's say, for example, somebody who's earning a income of 1 crore and above a year versus somebody who's earning an income of just 2 lakhs a year, right? So that's the differentiation scale which we have. And then we look at offering products and services across each of these suits. And when we're looking at bucketing each of these customers, we see there are a lot more opportunities where you can custom make a lot of products. Uh, Earlier days, you see, there used to be standard products, right? We used to say there's a housing loan, there's a personal loan, there's a car loan. Now that dynamics have completely changed. We're looking at loans for end users. Today, I want to buy a mobile phone, there's a small phone loan. Today, I want to pay a electricity bill on a loan, there's a loan for it, right? A simplistic term is called buy now, pay later. In Bajaj, there used to be something called as an EMI card. In Shriram, there's something called as a smileage, where you can also look at, filling fuel on loans, right? That's the kind of business. Transport is one of the lines of businesses which I've which I very clearly work on. And one of the products that we have today is that for truckers, one of the biggest problem statements is that he fills around 30,000 worth fuel in a single trip. Now, if I'm looking at multiple trips happening, I need to be finding opportunities where I can fund this customer on a rotational basis. That becomes a small use case of a working capital loan. Usually a working capital loan is somewhere around 25, 30 lakhs, which you look at funding. These are small ticket sizes, right, which drives to around 1 to 2 lakhs and things like that. So it gives us the ability to innovate, constantly reinvent the way we are distributing our products, and also at the same point of time, digitizing a lot of these experiences. And that's what we are focused as a group. And that's what our next 18-month goal also as the company is. As a direction, we would like to be more open, more open to collaborate with a lot of tech/fintech companies, creating new opportunities with books so that, we could grow our own book, and also look at, creating more and more opportunities for startups to collaborate with us. So with that agenda in mind, we've also started investing into teams and creating areas where, people are not lost into my own system. Because when you're talking about a group of 75,000 employees, if a fintech wants to approach us, they would get lost in the system within, right? You can't even really touch base upon something. And we are structuring in a way that, people can leverage us, and the companies could get benefited because of the structure which we're putting in place. And that's how we are focused upon. That's how we evolved.
Sure. So when we talk of digitizing, initially, I think when digitization started, it was to say whatever is done, in the physical world, let's just do the same thing in a digital world, so that there is tracking and data available on what's happening. So I think it was more of a governance mechanism than really a facilitation model. It was still about data. It was a lot of stuff that happens in the back end. And today, when we say digital, we are saying, I'll kind of do a credit assessment. I'll kind of do Aadhaar-based validation. I will kind of disperse online, etc. But this predominantly works in a fairly, with a segment of people who, who have a credit score, who have a lot of data, who are in the ecosystem of, the digital world. But how does digital work, in places where people are still, let's say daily laborers, people are, people are not fully consumed in the digital economy, both from using digital tools as well as not having enough data in the digital ecosystem about themselves for somebody to do that. So how do you see, I think maybe the two of you can help us understand, how do you see digital playing a role in the segment that we talk about here, where people who are not out there?
Yeah. The crucial point which you highlighted is the assessment of the household income for the informal sector. I think NBFCs over a period of time, like how Abhijit pointed out also, like they have developed tools, they have developed their own systems to assess the household income of such clients. We need to understand not only their business cycle, but their entire life cycle. This leads to even product innovation at the grassroots, because as you rightly, all of the speakers said, MSME clients, they are the graduated clients. They are not in a position to offer collateral. So basically, we should look at the strength of the enterprise and then offer them funding which is flexible at terms at which they can repay. So this is so using technology, we are able to cherry pick customers who have that sort of a history. We look at the past data. We are creating the credit profile for such entrepreneurs, and we are funding them based on their potential. Basically, it's a win-win situation for everyone. Banks are using NBFCs and MFIs as intermediaries to target such micro entrepreneurs, because we have developed specialized skills not only in assessment but also in underwriting, which are very crucial for sustainability of the businesses.
Yeah. See, the digitization process itself has been going on in the country maybe over the last decade or so. It has been slow to catch in the deeper rural segment. But it is not that it is not happening. There are a lot of people now using social media platforms and thus becoming comfortable with digital interactions. So a lot of apps which are coming in are playing the role. And technology is enriching the entire chain from the customer sourcing or identification to the loan processing to the delivery as well as the collections, all on apps which are based on the mobile phone. And mobile phones, the way they have spread in India, mobile banking has become the number one tool and the universal base for the future. So in this situation, by simple mobile apps and mobile-based technology platforms, we are able to reach out to the rural customers and really make them use that. I'll give you one small example. See, about 5-6 years back, I was trying to get for my housing microfinance company some kind of a psychometric analysis tool which could be used for the assessment of the behavioral assessment of the credit for the clients. But there was nothing available. It was only for the salaried people, etc., only for certain urban segments. Something had been developed. But now in these 5 years, now for my new company, when I was searching, I found that we have companies which are coming up with psychometry with artificial intelligence based questioning, where based on your response to the first and second question, the third question and fourth question change based on the response. So artificial intelligence is also being used on top of the psychometry and doing that. And yesterday I've tied up with that company for a technology of this thing. So that will be useful for our clients and even for the rural clients, and even assume that they are either semi-literate or illiterate. The tools are using pictorial questions, and based on responses to pictures, they are able to do that. If you are not able to understand the language or the accent of the machine, then you are having translations which are being put which can be triggered, and then you can have a voiceover which will give it. If they're not able to read, the voiceover comes in. So a lot of technology is coming, very sophisticated technology around very simple things like assessing the credit worthiness of a rural client from a credit behavior point of view. So this kind of changes are coming, and they are reaching out to the rural segment also, where earlier it was not available. But having said that, I should also say that use of the bank accounts or maybe wallets for really storing money and using for all spends, that is not really very prevalent. Maybe from in the microfinance sector, from 100% cash collection, we might have gone down to 80% or so. But the bulk of it is still based on cash collections. So this is an area again which probably needs to evolve over the system. Probably we need to have, just as we have fintechs coming in with online lending platforms, giving various other enablers, maybe we need new technologies and new companies and firms coming in who are able to take care of the last mile collection and digitize and present it to the lenders, so that the lenders don't have to go down to the last mile and do the physical cash collections and deposit. And that has to be integrated with banks. You do have problems when cash has to be deposited in the banks. They say, no, we will not take more than so much cash. A lot of these things, the ecosystem is still developing and needs to get fine-tuned a little more. These are practical problems, but the changes are very visible. And they are happening, and they are being used even for the illiterate clients.
So a quick question. When you talked about this assessment tool, do you expect this to be used by the end users or do you expect it to be administered?
No.
So do you expect one of your folks to administer that sitting along with somebody, or do you say, you download app or I'll send you a link and you do it?
Yeah, both are possible. Both are possible. Actually, maybe in the initial stage, the somebody enabler has to be there to be able to do that. But as they are getting simplified and becoming easier to respond, with just giving them the overall guidelines and instructions, I am sure that they would be able to respond on their own.
So you see this moving towards the
Yeah,
self-serve model
towards
as
that.
well? Okay.
Right now, it is 15% of our clients are able to do it themselves. But I mean, the sad part of it is only 20% of the women have access to smartphones, because generally it is used by men and the children. So that is a problem. Once they have access, it will be feasible.
Yeah, this is to supplement that, especially during the pandemic, because of the online learning, etc. Even those who had access to smartphones, those have been taken away by the children for their education. So they have lost their access.
So while we talk about that, so I wanted to, I think you spoke about, Ajay, certain products that have come out. Because earlier, for example, a lot of the products that you spoke about were just personal loans. And one umbrella, you just take something called personal loan, do whatever you want. But now we're looking at, specific use cases. So how do you see the evolution of this kind? And do you still see it as, use case specific loans, or products being worked on as an offer to the client, or do you see that kind of being available only at specific points of consumption? For example, pay later, for example, you're not going to list it on your website at all. It will just be at the payment gateway. You can say, why don't we take it at Sriram and then move on. So how do you see that evolution happening?
So there are a couple of points of view here when I talk about use case based products. The first thing which comes to mind is embedded products, right? That's exactly what you're talking about, is pay later, where I'm looking at being that extra cheese on the burger at any point of time, which is a core product which I'm getting consumed. And when I consume that particular product, like how you have a payment gateway, you have a lending gateway, right? You take a loan and you get a loan amount debited and things like that. Now that could be a larger line, that could be a smaller segment of a line which is given to a customer. Now, the next piece which I would want to bring out on the table here for discussion is identifying opportunities to give credit to an untested customer. And that's what these smaller ticket size products give. Now, let's say, for example, there are 30 people in this loan, in this room right now, right? Each of these people may not need a personal loan, but each one could have different needs. A lot of them would come from different credit cycles, right? Some would be a 800 plus CIBIL score. Somebody could be a 0-1. Somebody could be, 600, 650 or whatever. Now, when you're looking at each of these segments, every customer deserves credit. And how much of credit at what pricing is what these unique products really define. How do you want to build your entire ecosystem into? And that's what paves the way for such futuristic products. And at the same point of time, building more and more use cases. Now, you look at the fintech ecosystem, we have roughly around 2,800 companies who are there today, right? And then you look at all the connected ecosystems. You can take sectors like brands like, aggregating cars, brands who are aggregating housing or rentals or things like that. There are specific use cases for each of these. And each one demands a different ticket size. Like an average ticket size of a transaction on electronics could be around 15,000 rupees to 18,000 rupees. Why would I want to give him a loan of, 25 lakh, right? And nobody is going to take a 25 lakh or a 10 lakh loan to pay for a need of, 10, 15 lakh. So how do I look at getting customers use only what is very much limited for that particular need? Try build a behavior so that, people are getting to experience this particular product and also build a credit history and a pattern. And what percentage of that entire process could be fully automated so that, we don't need people to be sitting and verifying. It's a calculated risk that you take. You define on your portfolio that X percentage is what we are looking at a default rate, and defining what are your pricing segments. That gives us a clear picture on how this direction of customers should move on. The next piece is when I talk about undeserved customers or underbanked customers, we're talking about people who are not getting credit. And if there are no formal ways of assessing credit, what are the ways where we could look at building our own rule engines, right? What is your alternate credit model? Do we understand these customers better? with a smartphone penetration to the customer segments who are also growing, right? Today, India as a country, today we are around 71% smartphone penetrated, at least in the top. That's what data for my all 3,000 odd branches, which I see today. Now, how do I look at building on that and build an alternate engine? If there are data coming in from different sources, how do we leverage it? And that's the different forms of evolution, which I see using credit mechanisms to build newer products and make it reach out to a customer. It could be somebody who's running even a small tea shop or a larger SME or a trader, or it could be even a salaried employee. And that's the process which we are into and building.
Sure. So I think what we are talking about is unsecured loans, where you say, I think, and for a lot of us, you may be aware of it, but Bajaj Finserv did that with consumer durable loans, where, they said for, let's say, a salary class, I will, for people who are not there in my database yet, or not there in, let's say, CIBIL database, they said, I'll give 10,000, 15,000, you buy a TV, you buy a fridge, and then I'll kind of see how I can upsell and cross-sell. Which is very similar to what I think we are all talking about. For example, here, when you speak about adding people to the database, you setting the data of saying that, I'm going to give somebody 15,000 and I'm going to see that there's a repayment of, let's say, 1,000 rupees coming every month. Or in your case, Abhijit, you're talking about startups as an entity who don't have a credit history, but then you're saying, let me do that. And that's, I think, one place where NBFCs have taken the risk and said, I'm not going to, I'm going to be unsecure, and it's okay because that's something that I'm initiating on my side. But one thing that I wanted to understand from each of you is that where do each of you see the line being drawn in terms of how far you think that unsecured part should be taken? I understand, of course, it's going to be different based on different organization, founding philosophies, etc. But even with that understanding, I want each of us to talk about, what the founding philosophies of your organization are, and where do you draw the line as you in your organization. So maybe that insight would all of that. Maybe we'll start with Abhijit there, because he's moved from an investment bank to an NBFC, and similar cases, Ms. Kalpana.
A very difficult question to answer in one line, because there is SBI, there is HDFC Bank. Do they do exactly everything same? Answer is no. The risk-taking ability, the way they assess risk, the way they present the risk, and the way they take the decision about knowing the risk is different. I mean, I'm not saying who has performed better than the others. That's that we have to see over a period of time. But so I think Yes Bank also, they took risk. They took much more risk than probably they should have taken. So it's an individual call, So I think there is no defined way of saying, hey, this is how we take the risk. How do we take a risk? See, we have slightly different background. We come with a commercial banking background where I worked with PSU Bank. I work with a development bank called SIDBI, so where I've seen and built the microfinance sector. And then I have worked in an investment bank, and then I'm into an NBFC. So what happens is, we know equity, we know debt, we know structures. So when we look at a risk, we also try to see, hey, is a company, give you a confidence that they will be able to raise the next round of capital. Like Arun is running this company, looking at Arun and his team, looking at what they are building, looking at the market, because we do a lot of equity. So is there a demand for this? Will Arun be able to raise the next level of capital? That's helped me to decide whether there's a risk I can take on Arun's company. So, but I think not everybody will think that way. They will think, no, what is the fundamental of financial, of the balance sheet, of the financial statements? And then you take a risk. Yes, in some cases we do take risks based on financial statement, but every case is also unique. When you say we are funding a startup, what do you assess? Where is the financial statement? You're banking on Arun because Arun is the face in front of you, know that Arun can deliver. So then it's a different game. So the assessment protocols, assessment tools, assessment method, assessment approach, everything changes depending on what you are assessing. So I think the landscape is changing. And sorry, Arun, I'll take one more minute probably.
No, Abhijit, I just wanted to say if you can add a specific example so that the case is illustrated a little better.
Yeah, so I think, let us say, I'll give 2-3 examples. Let us say, I'll not name the entity, but we were looking at a company. We just got an NBFC license. And we also helped them to raise equity. So that way we had a confidence on the promoter. And we know he's a serial bank, he has been in a banker for long. And we know that this is a category which, or the product he is delivering, he understands it well because of the bank he has worked on that. Even if when his first loan was disbursed, we offered him a 5 crore loan. Now, why did we do that? Number one, there were investors who were ready to back him on day one, based on his experience. Even before he resigned, we got the term sheet signed. Second, he has built business in the bank. That gave us a confidence. And third is, he has built a team. He's not a one. He has already brought in a team which has also built businesses in the bank. I think that bank and NBFC, that gave us a lot of comfort. And believe me, today the institution is doing well. I know they are no longer our clients because they have grown to a level wherein they are getting lending at a much cheaper cost. But we are the first one who took a bet. Now, we took a bet on another company which is into EV space. And they are doing battery swapping. Now, we know this is probably the first company which is scaling up in battery swapping. It's a very new concept, right, in India. But we really like the promoter. And again, there was an investor backing them. We spent tremendous amount of time with the promoter, said, yes, they can do it. We took a smaller bet, about 2 or 3 crores. In just 12 months, the company has grown like this and has just now brought in an amazing global investor. So it is that assessment. I would say some part of it is gut feeling. And that gut feeling comes out of experience, a bit of understanding, and also it's a team decision. We don't, it's not me who takes a decision. My team takes a decision. So we have empowered the team to understand certain things and take a decision. So it is different for different institutions, right? Because it's a new sector we are doing, which is not even started well in India, right? So it depends, that's what I would say. But I think one of the things to highlight more for a retail NBFC perspective is, there are a lot of things which today can be digitized to help you to do better. Like simple thing probably Arun is also trying to do is think of it, earlier we used to deliver training to our people, bringing them to our centers and train them for 2 days, 3 days. Now again, the amazing mobile has changed everything. We are delivering on the ground with amazing instructors, but nobody has to come into a city to get the training, right? When you do a field operation, it's important that there is a cost related to time, there's a cost related to travel, and we can save that if we have this level of digitization available. Same happens for your client, like what you want to train your client on, right? And what else you offer, that is also important. So all these things can happen through a mobile platform, which is going to effectively change your cost. The trio of today, Jandhan, the trio, we call it a jam, but jam is actually unlocking the jam, which is Jandhan, Aadhaar, and mobile. The way it is being interfaced, like look at today. I mean, we talk of gig workers, right? The most of the larger NBFCs are running to say that how can they reach to the gig workers? That's being considered as a very large market after microfinance, right? What microfinance sector has built over the years. And what is there in the gig workers? They are all informal sector workers. They don't have any way for you to verify what is the income. No way. Probably now in urban, the best way to verify is the way they are making payments. Like what sir was referring to a few minutes back, like the payment network, what has been set up, whether it is a Google Pay, whether it is a Paytm, MobiKwik, anything, Phone Pay. The amount of data that's available to us, especially in urban and semi-urban areas. I mean, now you go to have a pani puri, the guy has a QR code or a UPI. So bank accounts which were earlier not being able to link are being linked through all these apps. That gives you tremendous amount of data, and people are banking on the data to move to the next level. So he was asking also about about the different products and services. You talk of a product which is not there in the market today. BNPL easily available. You want a loan available, whatever purpose. Nobody is going to ask you. Earlier you needed a purpose that why you take the loan. No purpose required. Microfinance needed a group to be formed. Now that is also not required, right? Now look at it today. You want a product for wealth management available on your app. You want to invest in trade, available on your app. You want to do export finance, available on your app. What is not there? So I think tremendous level of innovation happening, and hats off to the fintechs. And as you was talking about, I'll give you some data, very interesting. In the last 2 years, 1,100 fintechs raised $12.4 billion. Is whooping amount in a economy like India. That speaks of how fast we are growing in this space. $12.4 billion of equity capital. I'm not talking of debt and other things. So that's the level of market we are operating in. And I think it's about being nimble. It's about being flexible. It's about thinking that if you can have the right technology, like today, no, many of them don't operate a lending program. They operate only a platform. Just a platform for you. You operate on that platform. I was talking to a Fund Fina, another company, offering a platform. They are not lending themselves. It's all some bank lending or some NBFC lending. So I think things are changing. But one line of caution, what I get from the RBI quarters, because we are in touch with them regularly, you have to take risk. Earlier, the BC business was growing at leaps and bounds, but now with the co-lending arrangement that has come up, RBI doesn't say this, but this is a honeymoon period for BC lending. You have to take risk on your book. Days are coming where you will have to lend, you will have to take risk in your book. Even if it is 20%, it's okay, but you have to take risk. You can't just say, clients are there, I'll give it to bank will lend, it is not my risk. That's not going to happen. So be prepared for that level. It's a question of 1 or 2 years. RBI will implement that.
I think from risk point of view, like the new RBI guideline has opened up a lot of new things. The risk-based pricing is a very new approach, because when you start working on that, only then you realize for different geographies, like in terms of cost, operating costs, travel, we are spending more on cross-subsidizing. So this gives us an opportunity to develop a robust risk framework, and that will set the exposure limits, what you were asking me. So board can clearly say, this particular geography or for this particular product, this should be your exposure limit. So that way we can actually take care. Second point which I wanted to insist is going back to the basics. In the past, lending used to be based on the capacity to save. I think somewhere the entire NBFC MFIs also should encourage people to save money, because that will give us a very good track record on how much to lend to a particular person. Now, again, it's credit card culture. Now people are spending, but they are not really credit worthy. So I think in investing a lot of time, encouraging them to save money, I think that will also be a very, a good step in helping the sector, so that there is no delinquency. We are lending to the right borrower. These are some of the thoughts I just wanted to share.
One take, a different take on the question you put.
You wanted to add?
Yeah,
something?
only
So
last
rather
point, that even this 25% for MFIs I'm talking about in particular, now they have given us a wonderful opportunity. Like 75% can be microfinance, 25% we can focus on secured lending, because that gives us a lot of room, even diversifying our products, so mitigating the risk. 25% at least will be secured. That's what I want to say. Thank you.
Yes.
See, you asked about the unsecured loans.
Yes.
In your question. See, I have a different take. See, the MFI sector grew and thrived on unsecured lending, where the end use was fungible. The money, whatever was given in the application for A, B, C reasons, the money was fungible and was being used as per the current priorities, and frequently or majority of it for consumption. So this is a trend which had been happening over decades. I think now there is a time has come for a change. We need to look at end-use based unsecured lending. What I'm saying is, so far, the families have tended to use the money which was available as a microfinance loan or a very small ticket loan so as to meet the urgent requirements. What are important have still been put on the back burner. And this has been continuing. If we really want to transform the society, change, improve their conditions, at the same time, make the loans more meaningful, I think we need to concentrate on doing lending for what is important rather than what is urgent. From that point of view, I'll give you a few examples. We have developed a few products for that. See, for example, we have developed a education loan product for the rural underserved families who are the really microfinance client segment families, where we are seeing aspirational families who want to put their children in better private sector schools or for vocational training, etc., where a lot of upfront fees are required and which they are not able to afford. We will give them loans and we will take it in the usual EMI basis. So, but the end use is determined. They have to submit the fee receipts, etc., and or we send it direct to the institutions. So we ensure that a very important priority of education is not compromised because of some urgency to repay a debt or do something else. Similarly, we have come up with a very innovative new product along with an international organization who supported us in the research on a unique roofing loan product. We have developed it, done a pilot, and we are now delivering it. A roofing loan product which looks at that module which is the most vulnerable in the house. It is the roof. If roof is upgraded, shelter quality increases significantly. But these are people who fall between two stools. They are not destitute and getting free houses. They are not well enough to be able to repay a housing loan, even a bottom of the pyramid housing loan like what we had been doing in our housing microfinance company of a 2 lakh loan or a 2.5 lakh loan. They are not able to repay even that, their capacity. So they'll have to wait for 3 years, 5 years before their capacity becomes adequate to take a housing loan and get a new house. What do we do with them in the interim period? We said we'll come up with something which is a medium-term solution, where the ticket size is much lower, the EMI is lower, they can afford it at their current repayment capacity, and it upgrades the shelter in the medium term adequately for them to build up their economic capacity. So a dedicated end-use ascertained roofing loan is one that we are doing. So like this, very specific, important segments which have been neglected over a period need to be targeted even in the unsecured loans. They cannot be left like amorphous, high and dry kind of a thing. You do whatever you want. I think this is a very important transformational change which has to come, and it is a underlying philosophy of our NBFC that we will focus on this kind of loans.
So I think we've come to the, I think we have another 10 minutes to wrap this up. So maybe I'm going to request, a 1-minute conclusion from each of us. And then I'll just want to open the floor for questions, because based on this, I'm sure folks have few questions maybe to address to specific panelists here. So maybe we'll start with you, Ajay.
It's a very exciting phase. That's all what I would say. There's going to be a lot more innovation. There'll be a lot of experiments running in the fintech space, right? I mean, earlier days we used to have 1, 2, 3, 4 products. You'll find around 500 odd products which are roaming around in the market. Few things would work, few things may not work. It will give us learnings. Most important aspect what is going to come on as we see is personalization, right? Understanding and interpreting data, making custom-made products for each and every customer, than having standardized bunch of products. So that's the way I see future. The government and the RBI is also investing into setting up initiatives like the Digita and things like that, so that we could enable all these paytech products or even fintech products accordingly. So that's something which we're looking at coming up from a digital roadmap perspective. Mobility is also going to facilitate a lot of transactions with the increase of 4G and also 5G in the future. It's going to be making a lot of waves in terms of how we are going to drive each and every product consumption digitally. So that's my take on it.
Thanks, Ajay.
Yeah, I think we covered quite a lot. So, but I think few things. You have to always understand that if you think one way, it's not going to help. What I mean by that is massive market, massive demand, technology is changing the landscape, all fine. But whom are you banking on? Your business is banked on your customers. Are you focused on your customers? Are you thinking about your customers? Do you really care about your customers? If customer is not happy, at the end of the day, he will switch. And that is one of the reasons in many fintechs, without having a direct customer, means who are the BC and others, are facing a challenge where the investor are asking a question: do you own the customers? It's very important, relevant, critical for your business to be very clear that do you own? What I mean by own is not really ownership. Own means do you have the in-depth relationship with your customers? Do you understand your customers? Are you delivering a product and services which is relevant for the customers? Do you really care about your customers? Do you check with him or her whether the service is correct or not? And the service is very, very critical. And I'll give you a very interesting example. I quote it almost in all the conferences. Probably some of you would have heard it earlier. Is that, it's about Uber and, a company called Flight in the US. You've been to US, there's one more similar operator like Uber called Flight. And they operate FLYT, it's fleet actually. So their drivers in general get at least $1 or $2 more in tips than a Uber driver. And the simple thing is, once the customer boards a cab for fleet, they're greeted, the driver talks to them. So it's whatever technology you bring in, there is always a feel factor. So don't completely rule that out. I mean, not that everyone needs it, but don't completely rule it out, because it's important that your business is standing because of your customer. And the customer will be something where you should care about, think, build your service, products, and everything around that, so that they are not unhappy. Because if you lose 50% customer every year, your business is gone for a toss. You will be struggling every year. So please keep that in mind.
Yeah. See, with innovations in products, innovations in technology, we are transforming customer experience, credit processes, business analytics, identifying the pain points and experiences of the customers, and finding the solutions for that. All this is happening. With all these changes, what is necessary to ensure that this really leads to a transformation of the entire financial ecosystem? I would say some of the areas which need to be looked at and focused upon. One is the co-lending, which we talked about, very important. That has to become a widely accepted institutional phenomenon. Even now, banks, maybe even bigger bank like NBFCs, they are not still very enthusiastic about co-lending. They are not really looking at it. They are still looking at it as their exclusive domain, whatever business they are doing. They need to really open arms and look at partners and go for partnership, because that will be a exponential growth and a multiplier effect that would be there. And complementarity of strengths would come in to ensure that the growth is much faster than they would be doing as a nuclear organization. So co-lending needs to be encouraged both by the larger well-established institutions who have the capability and hence the funding ability to be able to take on partners for the co-lending. The second area is co-creation. I think now is a situation where the competition is really becoming or transforming in a different form. All competitors are becoming partners. So more of co-opetition, more of co-creation of ecosystems, co-creation of a chain where currently those who are competitors are actually collaborating to build up a much bigger scale and much more profitable operation. This is important. And thirdly, very, very important is the regulatory environment. The regulators are quite proactive, but they need to be much more nimble-footed to be able to run at the pace at which the innovations and technology changes are taking place, to be able to understand, appreciate, analyze, and set the ground rules quickly, and be able to say, this is the framework which is available to you to grow. And they need to look at things like business aggregators, business more of payment gateways, payment aggregators. At the same time, looking at the securities of additional factor authentication, tokenization, all these things will have to come in. Also, they will have to look at new areas where regulatory lead is required. And that will ensure that we create a financial ecosystem of payments and e-lending, which is the best in the world.
Sure. Thank you.
I'll not take much time. I'll be very brief. I was associated with IFAD project, which was a forerunner in the government programs. It introduced the concept of back-end subsidy. So only after the repayment, government started giving that subsidy portion to the end clients. Similarly, here I feel government has done a lot of taken a lot of steps to promote digitization. As MFIs, it is 100% cashless disbursements. We want to be in cashless collections also in another 2 years. For that to happen, government should incentivize digital transactions. If they, can be a small token, but that will go a long way in institutionalizing this informal sector or the clients we are talking about. Thank you.
Thank you. So I think what we'll do is, I think I said we'll have a session of Q&A, but I think we'll have to wrap it up now. The panelists are going to be available outside for any of you to interact individually. So thanks a lot, everybody. Really appreciate your time and inputs, and I had fun being here having this conversation with all of you. And I'm sure everybody there had a lot of insights and fun as well. So thanks a lot, and thanks a lot, audience. Appreciate this.
Thanks a lot.
So thank you to all the panelists. I request you all to kindly stay back. May I request Mr. Arun Subramaniam, co-founder and chief business officer, Shaspil, to kindly felicitate all our panelists, starting with Mrs. Kalpana Shankar, managing director, Bellstar Microfinance Limited, to kindly felicitate with a memento as token of gratitude and respect. Can we all give a huge round of applause, please? Following this, may I request Mr. Ajay Thomas, kindly come forward, sir, Chief Digital Officer, Shriram Capital. And may I request Mr. Arun Subramanian, sir, to felicitate him with a memento as a token of gratitude and respect. Also, may I request Dr. Ravi Gupta, sir, kindly climb up the stage and join with Mr. Arun Subramanian, sir. Thank you. Moving ahead, may I request Mr. Abhijit Ray, co-founder and managing director, UC Inclusive Credit Private Limited, to kindly come forward. And may I request Mr. Arun Subramaniam, sir, along with Dr. Ravi Gupta, sir, to kindly felicitate him with a memento as token of love and gratitude. Please, sir. Also, may I request A. Ramesh Kumar, Chairman and MD, Laraksha Impact Finance Enterprise, to kindly come forward, please, sir. Also, may I request Mr. Arun Subramaniam, sir, and Dr. Ravi Gupta, sir, to felicitate him with a memento as token of gratitude and respect. And may I now request Dr. Ravi Gupta, sir, to kindly felicitate Arun Subramanian, sir, co-founder and chief business officer, Shaspil. Please, sir, with a memento as token of gratitude and love. Yeah. Sir, may I request Dr. Ravi Gupta, sir, to kindly hand over the magazines to all our panelists, please. Can we all give a huge round of applause, everybody here? I would also like to take a minute to thank all our sponsors and organizers present here once again. Thank you so much.
भारत एक युवा देश है। विश्व में हमने युवाओं की आईटी एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बात के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख लगा करके बात कर सकते हैं। और ये मेरा साथ मैं हमेशा कहता आया हूं, आईटी प्लस आईटी इज इक्वल टू आईटी। इंफॉर्मेशन टेक्नोलॉजी प्लस इंडियन टैलेंट इज इक्वल टू इंडिया टुमारो। युवा देश है। विश्व में हमने युवाओं की आईटी एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बात के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साथ मैं हमेशा कहता आया हूं, आईटी प्लस आईटी इज इक्वल टू आईटी। इंफॉर्मेशन टेक्नोलॉजी प्लस इंडियन टैलेंट इज इक्वल टू इंडिया टुमारो। विश्व में हमने युवाओं की आईटी एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बात के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साथ मैं हमेशा कहता आया हूं, आईटी प्लस आईटी इज इक्वल टू आईटी। इंफॉर्मेशन टेक्नोलॉजी प्लस इंडियन टैलेंट इज इक्वल टू इंडिया टुमारो।
To you is you need to tell me 5 Bengali sweets quickly in next 5 seconds. Okay. Anybody else who's sitting at the front? Sir, you are into a dream world or you are imagining Rasagulla and other sweets?
Not yet. Maybe after the end of the day.
Okay. Can you tell me what was the question?
You are looking for Bengali sweets, right? 5 Bengali sweets. So you want to tell me 5 Bengali sweets? 5 Bengali sweets.
That was ultimate, I think, the perfect tickling to the brain. Okay. Now, beautiful lady is sitting right next to me. And the next question is to you, ma'am. You just have to tell me 5 favorite actors of yours. Any favorite actors, 5 actors name, next 5 seconds.
Amir Khan, Ranveer Singh, Ranveer Kapoor, and yeah, I think these three I know.
Okay. And the way you were expressing it, it was like, I'm ready to go for a date with them. If they are ready to go, come with me. You're ready? Okay. She's ready. Moving on to anybody else. Sir? Yeah. You're busy thinking something?
I'm going to speak now, hence.
Okay. Then I think the next question should be for you. Okay. Any 5, do you watch movies? Okay. Any web series? No. Okay. Okay. Your inspiration.
Well, I think Peter Drucker, the management guru. I think he's the man who saw tomorrow. Hence inspirational. Right? So, something what he said 150 years ago or 100 years ago is still true today.
You travel a lot? Yo, okay. So quickly tell me 5 places in the world which is in your bucket list and you haven't visited them yet.
Japan, basically tour Japan. That's something that I haven't done. Tour Switzerland completely by road. Maybe that's it.
Great and glad to know. So wishing that you visit Japan very soon. Thank you. And I would still announce once again to all the ladies and gentlemen present outside to quickly assemble inside the banquet hall. We are already running late and I want you all to be present inside. I would also like to thank our sponsors, organizers, and each and everybody present here for the day. Sure. So to begin with, may I request Mr. Damodaran Padmanabhan, Global Head Cognitive Computing 3i Infotech, to kindly give a presentation on the topic Cognitive Customer Experience in NBFC. Please, sir.
Okay. I see that 30% is filled up. Can we wait? Probably I'll wait for somebody to be more presence so that we can reach to more number of people taking the information.
Morning, everybody. Morning, gentlemen. And I would like to introduce myself. I'm Damodran. I'm a global cognitive head of 3i Infotech. I'm also part of 3i's Future Tech as a business unit. Glad to connect with you, everybody, starting with cognitive computing being a buzzword. What 3i is are doing around it. Why cognitive is required for especially NBFC sector. Being 20 years into banking industries as in 3i, we know banking, I would say, with the strong hands. So as an we started with the banking and then now we are in almost in every tech space to provide solutions and take it forward. So with the footprint of expertise in domain knowledge and banking, bringing up the entire tech space of cognitive as a combination, and how does it's going to provide a serious value to the industry or moving towards an industry disruption. Can I have a mic? Yes. The approach where we're trying to bring in is one is an holistic view of a business and how does a business challenges can be addressed in terms of industry wise, because we know that industry is already standardized. It has its own process, it has a business innovation, it has a process innovation, it also have a serious technology innovation. But an intersection, or I would call it as an intelligent intersection of all phases, is required in terms of any NBFC, right? So that's where we have taken as a phase of phases where the challenge is in there. How does we, as with approach of a cognitive, will solve these challenges in the industry? And as a 3i, how we are solving this, right? As an holistic approach. So we understand the traditional challenges, traditional operations, traditional mechanism, traditional approach, traditional customer experience, and how that as a landscape is setting out for an NBFC. Here, we have channelized about all forms of an organization in an NBFC. So we understand from the investment, microfinance, as well as also infrastructure. So as an organization, as a whole scale, we start from infra to a revenue-based partner for a transformation. We doesn't start there, okay? Start from an infra. How does a serious revenue to an infrastructure connection, how does the digital transformation goes towards it? What was the role in the cognitive as a 3i Infotech? Is it same? Is it the same NBFC we start, I think that 5 years before? Is it the same NBFC is now? And is it the same NBFC is going to be for next 5 years? How far we are adapting to the new transformation? Yes, we understand cognitive will play, AI will play, ML will play, but is it really making a sense out of your business? How far the entire value proposition to the business comes in as a cognitive, right? That's where we have diagnosed into the all formats, including robotic process, automations, as well as API, blockchain, all formats, guys. All formats in end-to-end of bringing up the whole stack of technology. Keen the overall impactive that what a cognitive can do to an NBFC sector. Because being using the buzzword, decades in industry, we have seen that an approach wherein, okay, we bring up a serious cognitive engine in terms of customer interaction. What is the keen proposition numbers as a value you get out of it? Very simple. Not only is a structured form, we get a very clear insight from the overall as a better customer experience. We understand, we infer, we transform, we apply, and finally we create a solid impact over the entire point. Yes. How do I address a customer? In terms of contextual experience, in terms of connecting the dots to the experience, I would say Last month, 15th, my customer has reached out me for a problem, and then, okay, let's assume it is resolved. What is the chain link of a connection to the next interaction to the customer? What might be the right product to sell? What is the right pricing strategy for your customer? What bucket is gonna like? Does he likes what kind of a brand? How gonna reach it to the right? Entire strategies would be derived from a cognitive perspective. We don't leave it. We understand the customer in terms of security also, because since we know your geo, we know your patterns of usage, we understand the entire interactions as a identity management. That is a key as a security part. We ensure that you are being there in terms of approaching in the pure data. A transactional ability happens in 4 ways in terms of nature of a customer, right? What kind of a customer? Do I like an Apple series? Do I like a Nokia series? Or any format of a bucket you're trying to come as a cognitive, right? The more you know about your customer is going to be more easy to sell things. That's the bottom line, guys. More you know about your customer, more easy to sell things, the more how far I can know to my customer. Thus, my customer is really able to engage and interact with any forms of an experience that as an organization, as an NBFC, we are providing. Yes, finally, especially on the customer motivation, where that's where the cleanup of upsell, cross-sell, or diagonally connecting the customer for a different strategy. Why? Because let's assume that we understand your customers, right? Not only in terms of groups, segments, and also understand the behavior pattern, rate of transactions, nighttime engager, late bloomer, all facts and approach individually faceted for every perspective of a customer. Like one is, if I know my customer, I can re-strategize my entire product vision, right? When I want to disrupt introducing the product as an NBFC guy, if you think that, okay, is it going to fall under an existing product or existing structure which is already standardized and used, or a keen business innovation bringing into the product by knowing your customer to an extreme way of sensing the customer, right? Last one is, how do I engage through a digitalization to a low cost? Because whenever most of the NBFCs, we really think that, okay, when I want to move for a digitalization costing, okay, what kind of an investment? What is the value proposition as an NBFC I'm going to think? What is the ROI that definitely it's going to impulse? That's what I said. As an organizations, we are envisioning in a way that as an revenue sharing model in terms of transition and make sure the NBFC achieves. Yes, what might be the experience of an NBFC, customer experience bringing? Very simple, enhanced performance in terms of decision making. That's the key card, because every time the decision is delayed on an every moment when it comes to a human being, it is delayed by 27%. That where your entire, to be frank, an organization care I would change. Delayed decision is always equal to the decisions made in a wrong. So keen is streaming decision making would be the key point. Second one is confidence, because stakeholder confidence in terms of I know my customer, I know what is happening in my organization, I know what to sell, what not to sell specifically, and what is the right time to sell and right option of selling, including the cost factor benefits. Operational efficiency, because as an NBFC, we operate from different areas. I say that 1,000 points, 1,000 action items, 1,000 of units and people of connecting. All hubs are there. So operational efficiency will be a keen way where we have to look for an entire transformation. Last one is engagement experience. I see that people covering that everything in the app, everything, because last decade, the entire mobile, I would say the industry transformation was towards mobile, right? Made everything available on app. But is it still engaging? Is it still engaging as an entertainment platform? Because a platform which is not engaging, which is not connecting to the customer, people will never spend a time with you. So more like any banking institution, engaging customers with the app is fine, but what is the right material to make it up? Because just because engaging doesn't mean that he's happy. Bringing back to the basics, where end of the day, the customer is king. We have to understand the heart of a customer. I would say, bringing back my own notion, in Incom, we call it as we ship products before even the products are purchased. How does it happen? Because we understand that this guy has a 99% probable or a 90% probable to buy this product within the next 6 days, right? More we are proactive in understanding a customer, more increase in revenue. Straightforward mapping, nothing. It's a simple signs of understanding a customer in terms of their behavior, nature, expectation, evolve. And also keen on seamless personalized connection, because most of the times help and the timely help in terms of understanding a customer is a want. So 24/7 interaction that can be, if it is a cognitive driven, it will be more channelized, more interactive, more engaging. End of the day, the customer attrition is cut off, right? Because most of the time, the customer attrition will be the keen challenge for any organization in terms of expansion of business. Yes, more we know, more attrition is less. We can make up a retention strategy better way. If I understand my customer, if I am engaging my customer, right? The current, one of the surveys says 22% is the current recommendation that a customer recommends to the another. Because most of the time, banking, trust plays the card. My friend is using this bank. My relative is using this bank. My engagement is using, I would say, my organization, my entire community is using the bank. That's where the approach will go. The reliability and the loyalty of the customer is the key card. When you increase that, a referral of a customer, which is in turn a clear value proposition, will move up from 21 to 69. This is a survey based by Gartner. How? How do we strongly make up a customer retention? Yes, 5 areas: loyalty, efficient engagement, reward programs, and customer satisfaction. The chain link is, when I say loyalty, it is not about simply running a loyalty program. It doesn't work out, because no more a business works by a guts. No more a business works by a guts, right? We understand to run a simple loyalty program, an engagement portfolio, right? You cannot sell, I would say that you cannot sell to a customer in terms of right product to a wrong customer or a wrong product to a right customer. Bringing back loyalty rates, where that will play the major part in especially understanding the customer behavior, guys. No more, I would say, the relational perspective in cognitive, we call it as, in cognitive terms, we call it as, it's a graphical view, or it's a relational view perspective in terms of a frequency relation for each activity we manage. Yes, efficient engagement, channels, as per, right, let's assume that 100,000 customers we have. How does know that previous interaction happened? What was the pulse rate of an interaction? What is the interaction by an agent happened, or from a contact center perspective? From a sales perspective, what does an engagement happen? Do I have a single current customer portfolio to ensure that the next interaction, what is the right question to be asked? Your question in take it as an impulse to sell, right? That's where your entire cognitive strategy will help you to make it. What are the 5 points to discuss? Who are my top 100 customers to make up going for? Or who are my top 70 customers who's going to churn? Yes, since your customer portfolios are 360-degree customer portfolios ready, you should be able to make it. Why? A profitable customer experience is the card, right? Not only a customer experience, how do I make it as a very clear, profitable one? One is on the personalized and contextualized, right? Similar to when I want to put it in a simple term, right? You search for a product and the product will searching behind you when you write. That's what happens in your current e-com. Similar way, your customer experience can be enriched and arrived at, right? Average call handling time. Yeah, before even you are attending your customer's call, you might infer what he needs. You should infer what he needs to take the right call at that moment, because he is reaching out for your compliance or any concerns. That is a moment. So before reaching a customer, the readiness of yourself will play a major role. That's where the entire digital strategy of Cognitive will help you. Knowing the customer, individual customer need, right? That will help you to make up entire CLV chain of a customer, because entire customer portfolio will help you to retain the customer lifetime value across all specific omni channels which any current customer engagement happens, guys. Keenest competitive advantage in terms of complete engagement, in terms of digital transformation, as well as bringing up a hardcore 360 profile of a customer will change the cards of designing the products, designing the organization, because we call it as a reverse engineering pipeline. Based on the needs of a customer, the entire organization can be driven. Yes, what are the footsteps to take a serious path opener for a digitalization and a security? Yes, one is on the technology, second on the information, third on the business, fourth on the consumer trend, finally on the economic trend also. So all 5 factors will have a clear perspective of holistic view, which is that should be an approach of an NBFC. Can you ask that, Damu, will a product will do it? Okay. Or a solution will do it? Or an orchestration of a solution will do it? Or how do I solve it as a holistic by have a pathway towards, and let's say that within 5 years, my vision is that fully transformed organization and less decision making by a human, and transforming into an entire inferred decision making through a data makes you a very low risk organization at any point of our life. Thank you, guys. And you can connect us through, if you scan this QR code, you can connect us. And thank you for the time, everyone. Any questions, guys? Any questions? Thank you.
So kindly stay back. Thank you, sir. And now may I request Mr. Kunal Khatpal, Chief Risk Officer, Hinduja Leyland Finance Limited, to kindly climb up the stage and felicitate Mr. Damodaran sir with a memento as token of gratitude and respect. Thank you, sir. Thank you once again. Moving ahead, the convergence of AI, MI, IoT, big data, RPA, and bots enables organizations to make more informed decisions and respond more quickly to market trends and customer behaviors. The key drivers allow to gather up understanding and recognizing the patterns from collected data, thus empowering the NBFCs. The NBFCs are immersed in having the opportunity and adding the value in meeting the expectations of their customers. So with this short note, may I request Mr. Sundarajan KD, Vice President, Sales Quality Kiosk, who's going to moderate the next panel discussion on the topic AI, MI, IoT, Big Data, RPA, and bots, empowering NBFCs to evolve through revolutionary customer experience. And may I also request the panelists, Balaji TK, Chief Information Officer, Orange Retail Finance Limited, Mr. Gopinath S, AVP IT, Mathut Microfinance Limited, Mr. Ajit K. Menon, Vice President and Head of Operations, Viviti Capital, Mr. Vijay Kumar Ramakrishna, CTO, Clicks Capital, Mr. Durga Prasad Swaminathan, Chief Information Officer, Cholamandalam Investment and Finance Company Limited, Mr. Nikhil Bandi, Chief Technology, Digital and Operation Officer, APSC Financial Services Private Limited. So all the panelists are here. And may I request our moderator, Mr. Sundarajan sir, to kindly take over, please.
We should have started with good morning. Hope you are still in good morning, or I've moved to good afternoon. I'm not sure. I think I moved to good afternoon. Sorry. Thank you, everyone. So, maybe I was actually having a chat with some of the CEOs here down. I felt one thing extremely strange. You guys are a real silent performers. Some of the initiatives that I heard in the floor today, obviously, so much of banking and insurance we hear in the market, NBFCs are seriously silent performers. Some of the projects that I heard in the discussions with some of the CEOs here and COOs, CXOs here, I was seriously surprised that this much is happening in NBFC industry. Maybe if some of you can share your experience of what this last 2 years of COVID did to the technology transformation within the NBFC industry, right? Because I think banking we talk of UPI adoption, insurance we talk of digital insurance issuance, right? But what did for NBFC? How did this insurance NBFC industry saw the last 2 years on this COVID technology adoptions? Maybe Balaji, if you can share your thoughts, how did it go for you?
Hello, audible? Thank you. Thank you, Elets, for organizing this wonderful tech summit. Quite interesting to know various stakeholders here. I do represent Orange Retail Finance, non-banking finance company. We started operating in southern part of Tamil Nadu. We scaled up all over South India. So we do have almost 2,000 employees and a customer base of 170,000 customers. So if you ask me particularly in this past 2 years, how you guys scaled up? So we started operating from a double bedroom apartment actually for 4 years back. So by de facto, like I never had a kind of a server room or nothing. So I need to go ahead with kind of whatever the agile technology available to go ahead with cloud from the day one. So from ground zero, I need to go ahead with it. And as you rightly know, like every NBFC is borrow money. So we're in the business like 18th century business. What is that? Borrow money from somebody and sell money to somebody. So we're in the same business. So because there are bigger NBFCs, bigger banks are there. So what is my USP? So my USP should be only from a kind of a turnaround time. How fast I can able to empower the customer, how fast I can able to disperse the money. So that was the product we started building it initially. So from a kind of a 3 days window, 4 days window, we tried to bring it down to kind of a less than 5 minutes window. So that's what we did it. And fortunately, we got 160,000 customers with this kind of a turnaround time. So what we did is with this learning from this, so we started integrating with the various APIs, with various ecosystems, how fast I can able to build this engine. So we started empowering, I started giving my app to my customer itself where he can download the app, he can apply for a two-wheeler loan, but I don't want to even see the customer, I can able to disburse the vehicle to his door delivery of the bike also. I also started empowering my dealer community where you can see the entire visibility of it. Any walk-in customers, you can do end-to-end onboarding. So this kind of a various initiatives we did in the past 2 years. So these initiatives has made us kind of from a traditional NBFC model, we moved to kind of a traditional digital model. So that's what we did it in the past 2 years journey. Thank you for the opportunity.
That was great, Balaji. So maybe I would want to know from Ajit, you gave me a shocker by saying you have a zero branch, right? So how is it working for you from how, then I think you are only technology which brings you, right? So
Would you mind repeat that? I was filling the mic. Of course, I'm just going to get that. Go ahead, repeat the question.
So when you have you're operating without a branch, right? So it is only technology which has giving you the business. So what is this COVID times before and earlier and now? How this things changed for you guys in business?
So Sundar, I think I'll touch upon a few things, right? So we're essentially branchless, right? And we use our, firepower of the balance sheet to power a lot of businesses throughout the country. And Orange is a very esteemed partner that we work with, right? So there's a meeting of minds, right? So COVID per se necessarily didn't do much apart from accelerating our digital journey and transformation. Nothing changed for us. It's just that it was a new ways that we would look at working. And because it was branchless per se and was direct distribution, it essentially just accelerated how we could get there. Maybe what we could do in 2 years, maybe was done in 6 months, right? And potentially that has put us much ahead in terms of competition. Today we lend to all PIN codes in India, all states in India, but it's all done digitally, right? So it's a digital first attitude that you would need to have. That has definitely helped us accelerate essentially when it came to COVID. right? It just strengthened, our principles, strengthened our core, is how I would want to put it.
That was great.
Right? And the partnership with Orange, has been very robust. It was always API first, digital first, and that's how the future is going to be, right? You're going to have less of brick and mortar. I'm not saying brick and mortar is going to go away, but it's always going to be a digital first, because that's the cohort, or the population is pivoting towards a point where everything is available immediately on demand, and there is a lot of data to corroborate, through which you can underwrite, for example. We'll leave it for another day, but maybe if you have time today, I'll get to that. But that's where we are getting to, right? And it's going to be a lot of non-linear growth. So you will see a expansion in AUM, not necessarily coming at the cost of adding more people. So if you have to add more people to your AUM expansion, it's counterproductive, right? Where do you then get the ROI per se, right? That's where we are, right?
That's great. In fact, COVID have put everyone on our fast acceleration mode.
Yeah.
I think now we know how to do hybrid lunch along with work, right? Breakfast along with a video conference call. I think we all have become expert of
and
doing
maybe
that
in your pajamas, right? Wearing a jacket and wearing in your pajamas bottom.
So the professional wear have become a
right.
Boardroom has become our chairs, and
Of
I think our
course.
life have become a real hybrid. So
Right.
I think, as you said, it would be good for you to meet up with your partner on the desk.
Sure.
So maybe as a quality guest, we have been working along with DP for a while. So we have been in this journey of digital transformation. So we have been helping them on the velocity and the faster go-to market on the application readiness. Maybe, but DP, while I know maybe to the floor, how was this journey of last 2 years?
Thanks, Sundar. At Cholamandalam Finance, unlike Orange, we have a significant physical presence. More than 1,100 branches across the country. So we didn't have the advantage of being purely digital. So that was an initial challenge. And what the pandemic really did was drop quite a bit of barriers to adoption. Typically when you go with a digital investment proposal, first thing would be, okay, what does it cost? What is the benefit? Now the same, say the finance team or the investor relationship team, instead of getting up at 3 a.m. and flying to Mumbai for an investor meet, they could do it all over, a digital channel. And like you said, they could be wearing a jacket on the top and nobody knows what they wear below, right? So that adoption and the benefits they started seeing from the digital space really, kind of lowered the barriers and the questions that started coming to say, what should we be doing next on the digital space? So they saw the benefits coming through. And, like it was mentioning around, video KYC, things around RPA, a lot of that got significantly accelerated, during this period. And that's the big part we are seeing that, what would have taken, like you said, say a couple of years to typically go through the hurdles or frictions within. A lot of that gets smoothened out because, you realize that there is real benefit to derive.
It was great. So maybe Vijay, I know you have done a lot of acceleration and you are doing a fast acceleration starting now. So maybe you should share your experience to the forum on where are you moving from here.
Sure. First of all, I would like to thank this NBFC Tech Summit, because out of my 27 years, 17 years into the banking, and I've come reverse way from MNC Bank, Deutsche Bank, to Universal Yes Bank, to Bandhan Bank as a CIO, and now to NBFC Clicks. So it's a different experience. Like we used to go at a super fast pace. So in the NBFC, dynamic CEO Rakesh Kaul joined 10 months back, and I joined 9 months back. So we were, due to our book size was 5,000 crore, which shrink down to 3.5K crore. And we were making losses till December, but we turned it around. What we did is that we are working with your company, and also we have taken up 5 strategic projects in digital and AI and ML, and 20 hygiene projects, because it was a legacy applications which came from erstwhile G, and which we had to completely do a makeover. So I believed in 5 formulas which I learned in Deutsche. Means the processes are very strong in Deutsche. Even the UAT environment is having 99.9% uptime, which is not in Yes Bank and Bandhan Bank. They don't know what is the segregation between incident, problem, and change. Bola issue hai, fad gaya and all. It's a good learning which you get when you go over there. But what 5 things which I focused on is that C stands for customer first. Our PL D2C journey, we did end-to-end automation. Is the answer yes? If we have reached 100%, no, we are in a process of changing over the LOS. We have the in-house LOS, which is doing fantastic, but we need to upgrade to a different LOS. Customer first, end-to-end digital journey, and BL also we are converting into digital journey, which increased our profitability. And one thing which I just recently attended the BL workshop in Dehradun, one thing which understood from the field is that why clicks is making now 3.52, we have touched 4,000 crore. बोला कि सर हम लोग बहुत fast हो गए हैं. Means the decision making process, the credit sales, the system is very end to end digital. That helps. Second is API first, means straight through processing. Lot of automation. We have saved around 15 to 20 headcounts by doing the manual automation, manual work converted to automation by using the data analytics and the utility team working on. The third I is insight. Analytics means we are providing have we reached a level where we reached in Yes Bank? But the answer is no. But 50% we are there. We have done the predictive analytics. We are providing real-time data using our unique data lake to our BL team, PL team, HFS team. So that journey has started 9 months back, and that's the profitability started from April onwards. Sorry, Jan onwards. Then the next A stands for automation. With tons and tons of automation we are doing to ensure that not only the D2C journey, but at the back end, our cost of fund compared to the banks, because I work for 3 big banks, the cost of fund is very low. We have to compete with them. For that, our cost of fund has to be low. So our back end, the most of the hiring has to be done in the sales and credit team, the front end and collections team. IT, you have to be lean and mean. So how you can do it, and operations has to be lean and mean by doing a lot of automations and ensuring that you manage more with less. And last C stands for customer first. We have only the Paytm because of the XYZ partnership. We have got co-lending partnership with them. Only that data center is separate. That also for compliance reasons, we moved fast from Delhi to Gurgaon. But rest all on Amazon Cloud. And we are working with Amazon Cloud partners like Umbrella and all, how to reduce our cost from 8 CR to 4 CR. That's the cost pressure which all NBFCs will face. But this year, touchwood, out of 5 strategic projects which we took, we delivered 3. 2 big ones are there. Out of 20 hygiene projects, we have completed 5. So that's the thing which we want. And one thing which I learned in NBFC, it's no use to have inbuilt application development. It is very difficult to retain in global resignation movement. The best thing is to partner with the fintechs or any companies and get the time to market reduced and go to and deliver the product very fast. That delivers value to all the business heads, the collections team, and the operations team. So that's the secret which I learned in NBFC. And also, and the advantage of NBFC is that you are sitting on one single floor, you can walk down and the decision happens faster. So that's the advantage of using and in AI front, when you come, I'll say we have done very interesting stuff over there. So that's it from my side. Thank you.
No, you said that's it, but I heard a massive initiative behind, right? See, everything is digital, right? So everything is digital. Touch points are coming low, right? As much possible. I think probably some of the 50 plus people or 60 plus people may not even think what is happening in the current Gen X lifestyle, right? So how are you focusing on this customer experience? What are the strategies around your customer experience? Because everything is digital. So the touch points of the typical one man who can be dialed and spoken, that are lost now. So how do you strategize your customer experience? How was your feedback, and how do you get the metrics out? What are the strategies around the metrics points? How do you drive that in the industry currently? If DP, I can ask you.
So, our focus on the customer is predominantly, we again started on the digital front. So we have a significant feet on street, almost close to 20,000 folks spanning our sales and collections. So they are the first, touch point from a customer perspective. And part of that is, given our presence beyond, the urban centers to the tier 2, 3, 4, where, when you go into a lending arrangement, trust becomes very important. So the first point of, touch that they have with Chola as a NBFC is through a person whom they can relate to. And our aim has been, once that is in place, how do I then switch them to something that gets a lot more digital and gives them satisfaction through multiple channels of engagement? So then that comes through, whether it's a customer facing application that we can serve them through. And we also have, again, gone through significant co-lending arrangements. So our aim is to make sure that, like you said, the cost of funds that a bank has and NBFC has, that is a significant difference. We have to go to the market and borrow. We are not a deposit-taking NBFC. So our aim is to make sure that how can we serve the customer best? So is there a co-lending arrangement that we could have a bank who have a lower cost of fund, but don't have the reach? So then that's where, the whole aspect of a win-win in a tripartite situation comes into play. A traditional bank may not have a reach in a rural setup. We have that reach. A customer can get a lending arrangement which a traditional bank will not be able to do, and they get the benefits of rate because the cost of, the composite cost of fund will be lower for them, which translates to a lower IRR for them. So that's a big part of what we are doing to make sure the engagement with the customer goes there. And then obviously all the digital pieces then come into play to say, am I delivering a better time to decision? The metrics from a customer facing perspective, what is my time to decision to say, hey, here I'm okay to lend you this amount or this funding against this vehicle or a loan against a property. The same thing happens, time to decision. The next metric we go against is what is my time to disburse? How does it translate to him or her getting funds in their account or at a dealership to take the vehicle out in a vehicle finance situation? So that's on the customer facing part. Then obviously the whole, engagement internally. And like you said, a lot of work we are doing on the data lake at AMS2, and we're still in early stages to say, what is my time to data or information? Because typically within the organization, the perception is IT is the bottleneck, right? And that is an information required. They have to go raise a request or they send an email and somebody may respond when they want to. How do you eliminate that friction to say the time to data or information for somebody to make a critical call is available, a lot more quickly? And that's the internal part that we're working on. So there is a whole customer facing metric that we make sure we are delivering on. But the internal part is something that takes time, and that's something we've been working on to make sure that we start delivering to eliminate on the external side the process friction and on the internal side the data friction.
It's quite interesting. So I think maybe Ajit, this is for sure next you only state came to my mind, because DP said how their face-to-face trust getting built, and they are trying to build over that to move the customer to the customer digital channels. But I think you guys are straight onto the digital channel. Your face is going to be extremely less. So what is that in this scenario? What is the customer experience metrics that you guys have adopted, and what is the strategy behind this?
Sure. So I think very pertinent points. Cost of capital was one, distribution was one. The only way you can essentially, and I'll touch upon the cost aspect first, right? The only way you can try and improve ROE, because you have a cap and a collar, right? You can only lend it so much, and that's finite because it's price inelastic. Right? After a point in time, it snaps. Nobody will come to you. The demand drops, right? So then you again adjust to market realities. The only way you can improve is to do a lot of heavy lifting on the tech side. Thereby, your asset quality goes up by way of very robust underwriting. You become a better rated company, thereby reducing your cost of capital, right? So you cannot go northwards by raising prices in terms of ROI. You can only drop it using tech heavy lifting, also ensuring that your cost of capital goes down by way of ESG mandates, by way of getting better ratings, and all that is only possible if all the departments, functions work together and in unison to ensure that that is delivered. Today, that is only possible if there is a singular agenda of digitizing, so that the decoupling happens, right? You do not necessarily need to add one more body to get an additional rupee in revenue. If you are able to crack that and also partner with, so the phygital model will continue, right? You will always have digital, a blend of phygital, you'll only have physical only, right? This will serve right in different contexts, right? But if you want to really scale, and it all depends on where you want to segment yourself, how you want to position, how soon want to get to a certain size, etc. Everybody has different aspirations. So it's never a one size fits all approach. Now, if you again break this down into asset classes, if you're trying to service personal loans, right? We have a lot of, so Orange is a great partner we have, two-wheeler finance. We have a lot of folks in the personal loan space, good industry friends, NBFCs whom we partner with. Their customer experience becomes important, right? Because the origination is done by them, and then we co-lend, and then the backend has to be robust enough, which is built by us, because Credit Avenue is a group company, right? So it's all API based, and a decisioning happening under 30 seconds, and loans disbursed in under 30 minutes, right? If all that has to work like a dream, a lot of work goes on at the back end, and the gentleman from Audit France just did mention that, right? So customer experience becomes key, because I require access to statements, I require access to my payment data. Today, people have waning patience. Say, for example, if I'm a personal loan customer, and if I've made a payment today, I need to know that the payment is credited, and I need to get a return receipt that the payment's done. And the app, everybody expects the app to be updated. We still haven't gotten there where the apps are updated immediately. It still says it takes about an hour and a half. We are still running on payment rails run by NPCI, and I have great friends in NPCI. and the regulator, but a lot of innovation coming up from NPCI primarily on the payment system side, right? Today, if I make a payment at 10 in the morning, it could be a large institutional loan that I disburse, maybe let's say 30 crores to an SME customer. It could get credited in 2 hours, it could get bounced, but the bounce notice only comes to me at 6:30 p.m. when the batch runs, right? So we still need to accelerate a lot of things have to change. For me to essentially improve experience, it has to be an industry partnership. A lot can be done by ourselves. It is all immediate, right? There is a lot of, it's like instant coffee, right? Nobody has the patience for filter coffee. Of course, people in Chennai do. But everybody wants a coffee immediately. Hence, there is coffee powder that's available. You put milk and boiling water, and hey, voila, you've got your coffee ready. But well, that's different to filter coffee, right? It is a painstaking process, though we enjoy it. But I think it's something similar. Experience is different to different people, and it has to be tailor-made, bespoke for certain asset classes. Personal loan customers will be demanding. You would need to have data at the fingertips to provide them. It could be, their bureau scores. A lot of third-party aggregators today use bureau scores are made available free. But unfortunately, they are only plugged into the plugged into the systems of the bureaus once every 3-4 months. So the data that's available in the public domain is stale. So, you would still have a customer calling you and saying that, hey, you know what, I still have this loan running, when the loan could have been closed, but the data is still not refreshed because he's using a free report. Because in India, nobody wants to pay for anything, right? So these are a few things that, you can optimize on our end. At the same time, you will also require, the payment systems to be modernized, availability of the window to, disburse amounts at any given hour, keeping in mind certain banks have the capability to do that with limits, etc. So, truly that will only come in when there is a public-private partnership. A lot of fintechs are doing the heavy lifting, as he touched upon rightly. If the aspiration is to go to the market immediately, it is a build versus buy or a build versus partner sort of a model, and that's where how the ecosystem grows and innovation comes. If you ask me,
it's quite. See, maybe we work with some of the banks and insurance industries. In fact, sometimes when we used to talk within our organization, we used to talk very proud if some UPI journey goes through successfully. There is somewhere quality kiosk engineers are sitting behind, right? So, so the quality, the number of monitoring and management that we do on a lot of these digital channels, right? So that brings back, because now that you need a lot of data, right? So you need data, you need visibility, where the customer's journey is going through, where the customer journeys are getting dropped. One from a business metrics, obviously, Ajit, you would want to see from a business perspective. Probably other three gentlemen would want to see it from an infrastructure perspective, right? So what are that particular technology adoption that happened in this industry? Or are you really seeing a AI, MLs or a RPA sort of advanced technologies getting implemented, which is enabling you, if it is enabling you, or you are taking a journey towards that direction of adopting some of these things, both in customer journey visibility from a business metrics or in getting visibility on the infrastructure side, right? So obviously, every CIOs have a buzzword MTTI and MTTR, right? So it has been, I think I would say, probably I'm in the industry for almost 20 plus years, and this terminology never changed. Probably it went from 99 point some to 99.999, right? So that's only changes that have happened more in the industry. Maybe the customer journey success rate, I think we were happy when it was 90, then we were happy when it was 97. Currently 99.5 is the industry standard, and still we are not happy, right? So around this, what are the adoptions that happen? How do you see the industry changing around these technologies and adoption of more your customer digital journey, visibilities, all this? How are you thinking that adoption is going to go forward, or what you have done till now?
Very interesting. Very interesting. Ask me the journey right now, how it is going towards. Like you touch based on MTR, multiple things and all. Like we are into public cloud, multiple public clouds are there. What we do is, since it's being ecosystem, we partner with the best of the breeds and all. As rightly told, build versus what is it you can procure and all. Okay. From a standpoint, we focus on what is our key metrics, where is our USP. Our USP lies in our LOS strength. Because I do have 2,000 employees, feet on street guys. They don't have office. They need to be in a sales with the dealer location. So I geofence them. Every day I ensure at 9:30 or 10, they are the dealer outlet. It alerts me like how Zomato or Swiggy tracking is going on. I do have a war room dashboard team.
I pinpoint and can find out all my 2,000 employees where they are right now. So this helps me, yes, these guys are there. So it's a geo-fenced. Similarly, whenever there's a customer walk-in, what happens in the sales, if you go and walk in to buy a product, the sales language will be completely rosy, excellent. But when it comes to finance, no, that language will be completely different. So we need to bridge this gap because I'm at a different location at a finance side. The sales has happened. After sales, the handover is happening. So what happens just by getting only one KYC, I can give him the decision immediately. Just by taking a photograph of Aadhaar, can I give a decision? That's what I do right now. Just take a photograph of Aadhaar, I give him the decision immediately. Because my loan ticket size is almost 70, 80K. So there are multiple bureau score I run. If one bureau score fails, I try to maximize it also because there are multiple, almost 40-50% of customers, they could be a first time borrower and they will have some credit histories where each credit history will be reporting. If one fails, can I go ahead so that I can maximize it? What are the other API integrations? So at any given point of time, I do almost 40 API integrations. For example, I also tied up with these two gentlemen. Clicks Capital also does a little bit of co-lending, and that's a large partner. Vivrit also does a lot of co-lending. Once I capture this information, seamlessly I do a credit decisioning, then agreement goes to him through mobile, a digital agreement. He signs the digital agreement. Immediately I can able to reflect to them. If it's a physical, can I able to reflect to them. So all this happens at instantaneously. I can able to give the data to them. So like if a customer walks in, how fast I can able to give him a decision while he's going back, can he take the bike and go? So this has given us a strength. From a new bike, we went and ventured into used two-wheeler bike. So used two-wheeler, we try to bring the similar technology. Like I can do a valuation online. So if any customer comes, flat 30 minutes, I can give him a used two-wheeler loan, bike loan. And after this, it has given us a strength to move forward to loan against property with the same product. So what we do is we keep certain core, certain things. We partner with multiple fintech, multiple banks, like from Nash to eNash or whatever, UPI, Paytm, whatever you guys think about, start integrating with it. What is that you have a core, keep the core and just take various APIs, have a various API layers and see how the data are integrating. So that's what I would say the world is moving towards.
Thanks for that, Balaji. I think you gave us the life cycle of your environment. Quite interesting. Maybe Vijay, how do you see this MTTI, MTTR? How do you see this digital customer journey monitoring? And what you see is the analytics that is helping you? Because this is finally onboarding the customer, upsell, right? Everything is on this, right? Finally, I'm a business guy, so obviously I would see what am I going to sell more, right? So I'm sure your CEOs and your CFOs are going to finally see what IT is contributing more in this particular metrics, right? So how do you adapted this and how technology helped you to adopt this?
I think it's an interesting one. When I joined, I think that maturity was not there. In like you cannot improve what you cannot measure. That's what we used to say. So we never used to measure the uptime. The IT stack was not getting, the uptime was not getting measured. So I remember I used to be in 7 calls for 12 hours, 16 hours, 18 hours because our in-house LOS used to break. Am I right? The journey. So one paradigm shift which I see in Gen Z and Gen X is that we go for stability and product which is very matured, like Nucleus or whatever. The Gen Z wants a pure vanilla platform like Autonoma 8 or Epic Indify and design a dream digital journey. Am I right? So it's a give and take relationship. And I think one thing which I understood from after attending 3 workshops, the business workshops which I went and the team came, the one thing everyone came from NBFC background, nobody raised a concern of rate being the concern. The concern is that if we are not doing the journey speedily, means that the disbursement needs to be very fast, either for school loans, business loans, healthcare equipment financing. That's very important. 1 or 2% here or there doesn't matter. That's what was the eye opener. So my tilt was more towards the product, but now it's an end-to-end digital journey system. Now coming to the monitoring system, we started like 3 months back. We used to have multiple downtime, so many API integrations, and we grew. Like when you are in a startup, you grow in such a way that then at global registration movement, 34 guys move out in a year, the entire IT team vacant, and then you get a new guys. And then I started from the scratch, get the API list done and all. So we started we worked with the PL business head, BL business head, and the HFS business head that what are the APIs we need to do? We started a manual monitoring of that. And then manual monitoring gives false true and false alarms that this API is working in the morning. It takes 3 hours for them to do manual testing and it's working, but in the morning it's not working. That's the reason when we involved quality kiosk, AT, and one more guys, that we want to automate, we want to do synthetic monitoring. So that you are right. Now we started measuring. I said that once the good thing starts, then the ugly things comes out first. That, oh, you guys are so pathetic, that 85%. Then the bad things comes out, 88, means that excellent things comes out at the last, that you will start improving slowly and sweetly. And that's the thing which I do, because when I used to work at Deutsche Bank, there was an excellent example. The process get migrated from London to Bangalore or Mumbai. There was no measurement of SLA. And when we start measuring 80%, he said, you are pathetic. And I said, tum to karte bhi nahi the. Means you guys were not even measuring it. So the same thing here, when we started measuring it, it comes 85%, then it goes to 82, 80. Then I say that it has to be like, it will improve steadily, am I right? That we started measuring it so we know. And now we started seeing the APIs that we know. I've got one fresher from IIT that he only does the API management partnership. So that has helped me now touch the uptime of 98%. Means that's really important. End-to-end digital journey really makes the difference in the sales target. So we have started seeing how we became profitable from Jan onwards, because we started improving our journey. The APIs breaking or any journey breaking is improving. And we, on our in-house LOS, we have started making many improvements on address validation, FI validation, Karja APIs, Digio, DigiLocker. All those things are really helping the business achieve the sales target. And the BL business is different, PL is different, HFS is different. This has really helped us to improve the uptime. It's like, as a CTO or CIO, there was an interesting thing that I was having a cup of tea in IDRBT in Hyderabad. My friend HDFC say, I don't want to name, but he just said, Vijay, we ain't learned from anyone. We are HDFC of the world. World learns from us. And once that guy stepped out, and then the entire banking came down. Am I right? So you cannot be you cannot say arrogant skills. Am I right? You also, so as a CTO or CIO, if your maturity level, if I do the maturity level of 5 years, you cannot be more than 1 out of 5 or 1.5 out of 5 in the scale of 5 in the ITL maturity cycle. So the CIO, CTO will spend, if the company is not matured, the operations is not matured, in RTB, run the business. If it is more matured, change the business, do changes and all those things. It's still more matured, you go to grow the business, do more growths, capacity addition, more APIs, more infra and all. If you're still more matured, then you go to NTB, new to business, am I right? The CIOs and CTOs and CDOs should play in the NTB world, but that's the ideal world. It's a Nirvana world. But if you go and join a startup, NTB or Yes Bank, Bandhan Bank, it is not Nirvana stage. Means you will see the basic process is not there. 7 bridge call, no culture. The ITL process or Six Sigma, no process culture is there. Issue hai, haan, dekh raha hai koi. So there is nothing, and the vendor says, sir, मेरी तरफ से हो गया, मेरी तरफ से सब सही है, अब multi bureau connector में issue है. Multi bureau says, sir, मेरी तरफ से सब ठीक है, पीछे issue है. So I said that the ground rule is that meantime to report, CFO and CEO are behind my head, my neck is on the line. The 7 bridge call is not going to get closed unless we resolve the issue. And we had calls for 28 hours, 20 hours. So I said the best thing is that be vulnerable. Don't say मेरे यहाँ issue नहीं है. अगर आप जितना बोलोगे मेरे यहाँ issue नहीं है, if you see, then you more time you have to spend. So why don't you start testing your own application, the infra and all that? That has helped bring, because 3 or 4 vendor team, your team, nobody wants to spend 25, 26 hours. I said that the call is not going to go down till you resolve the issue. So that has helped reduce the MTTR. And also, obviously, once we get this synthetic monitoring from you or someone assigned, that will really help us identify the root cause earlier and reduce the mean time to repair. So that's the whole that's installed. And the one good thing is that I want to say is that I have only added the value to Clicks, because Clicks in 5 years, we have disbursed 15,000 crore worth loan. So the point is that applications are important, but ऐसा नहीं है कि without application धंधा नहीं होता है. Business will happen, it has happened, but ops and digital guys, product guys will make so many changes that customized application also gets wavered. Am I right? So we have to have a cutoff that once the system gets matured, then the processes needs to tweak rather than changing the systems every time. But when my 26 years, every time the IT only has to change, the system has to change. So system change beyond the limit and it breaks. Otherwise, no system is bad per se. Thank you.
Severity one calls also said, reminds me of one good meeting we had yesterday. So it's for one of the largest bank in India. So we had a CIO, CTO meeting together yesterday. So they had a major failure day before. So we were doing a little bit of a work on what actually they did. Because we maintain some of their customer experience dashboards, all that for them. So, so it was very interesting with them, because there is a CEO dashboard which they want to see, where the The CEO obviously wants to see 1,000 transactions went through, and out of that, 2 failed. That's all he wants to see. He doesn't want to see anything beyond that, right? So there is a CIO who wants to see, right, what percentage across my environment have caused that 2% issue, right? Whereas the CTO wants to see only my technology domain, my area, what actually have contributed to that particular 2 transaction failure. So, and again, we had a discussion with the individual app owners. So there are a mobile banking owner, there is a UPI journey owner. So they also want to know what percentage of my application contributed to that, right? So probably it will be good, interesting, because I think you guys make everybody happy, right? So you guys give the data of all these guys. So we were set up 4 or 5 of us, and because that was a major incident, so they wanted to see all the dashboards that our team have done and what are the data they have pulled and how they have solved the issue. So it was a solid learning for me at least. So you guys have a larger customer than what we addressed, right? Your internal customers are pretty demanding, right? So some of the data points was very learning for me yesterday. Right? So what do you see as the next step for NBFC? Now, I think last 2 years have accelerated the digital adoption. I think you guys are on, I think cloud adoption is already done. Data lake is in place. I think quite a bit of RP adoption I've had done. End-to-end automation is happening, right? So what is the future for NBFC on industry is talking of observability. So are you trying to do something on observability? Industry is talking on site reliability engineering, right? Industry is talking on multi-cloud tenancy, multi-cloud management. I think everything is API now. So it's industry is talking of API-fied metaverse, all that, right? So where is NBFC heading towards, and what is your expectation from a tech partners towards that? Maybe I can ask Ajit.
It's different strokes for different folks. So there is no one, it's not a straight jagged approach. It's not a cookie cutter approach. It can't be, it will never be. Again, I'll come back to the aspiration aspect. Everybody has different aspirations. Basis the aspiration, you will have to take one step at a time. As he said, it all looks very glamorous in an event like this. People are wearing jackets and sipping coffee, but that's not the reality, right? The reality is, sleeves go up at 11 o'clock and then they come down at 9 in the night. So it is a hard nuts game if you really need to crack it. And startups per se, we are a 5-year-old company. We've really grown 100% technically over the last year, right? So, it's just staggering growth. For you to keep up with the growth, you've got to have all the cylinders firing. You can't just have 2 dormant cylinders in a 4-cylinder engine. It'll still function, the car will still go, but it'll sputter and potter, right, if the cylinders don't fire, right? So, every function has to come together. I think the next stage of evolution is, of course, growth. And growth dealing and decoupled with, resources that we throw at it, right? Because there's a lot of tech heavy lifting that will go on, a lot of low code, no code deployments, a lot of workflow which will come in, which is already witnessed. Low code, no code revolution started. So I worked with a company 4 years ago. They did some revolutionary work. Today, low code, no code is still being spoken, in platforms like these, right? But it was pretty new 4 years ago. But they did some great work. So I could still have a low code, no code, LOS workflow deployed in 30 minutes today, right? What used to take years is now possible in 30 minutes. So with that, as the premise, if you can think what is possible, right? Business will happen even without the tech architects. Just that when you want to hit a certain scale, you will have to supplement that with great processes, risk management engines, scoring engines. Some of them could be proprietary, some of them could be bought. Some of them you partner with. Some are expensive to be purchased, so you partner with them as a SaaS as a model, right? There is no one size fits all approach. It is basis where you want to head. But one thing that is common and that runs across as a common thread is technology, right? It's how you use it, how efficiently use it. Everybody is today wearing a techno-commercial hat. I look at delivery, customer experience, delivery. The large part of my discussions today, 60% of it is digitization. So I sometimes feel that I'm actually doing a CIO's role. So, I keep joking about that with my colleague Prasenjit that, there is a lot of role overlap, right? Because we all of us speak digital transformation, because everybody has to speak that language. I was speaking to a private company which is primarily India's largest RTA, registrar and transfer agent. I met one of their business heads, and they're currently working on a project which works on building a recon engine for banks. So great use case when it comes to retail. Today, a lot of reconciliation issues exist, and that's an impediment to scale. They operate, hundreds and hundreds of thousands of transactions in the mutual fund space, where transactions worth 750, 800 crores happen, in a matter of 3 hours, using their engine. So a lot of these innovative solutions, keep coming from companies which then are, subscribed by large banks. So it is this interplay, this force that keeps pulling and tugging at each other is what will essentially get us to the next phase, right? Because problems will always be there. There are no solution providers. Today, I have 4 problems to which there are no solution providers, right? But one of them was reconciliation, and there is a provider which is working. It's just that it has to be repurposed because they're only offering it to the mutual fund space and not to NBFCs. So, I did speak to him and say that, I was in Bombay last night. So I said we should speak and partner and, develop something bespoke, because or else how will you grow the book? The book will still grow, but it'll grow at a slower pace. So coming to answer your question, I think it's more to do with, it's never going to be a one size fits all approach.
That was great. In fact, right partner who is going to co-work is what is co-innovate.
Right.
Work together and create. That's going to be the future for sure. Yes.
Right.
Maybe DP, you have a traditional with Murugappa Group background. There is not only a digital transformation, it is a business transformation for you guys, right? So what is the future that you are seeing for your organization? Where will you, from a technology or a business side, what should be the future?
I think, first of all, I want to relate to some of the points he had brought up, right? Absolutely, when I said this is the same journey we've been taking. And, as an NBFC, how much ever we do, the last 3 days of the month inevitably will be a challenge. How much ever you say incentive to book a loan early in the month, the last 3 days will have the significant volume, and that's what ends up stressing. So we have been working with you on, how do we make sure our origination platform, stacks up to the load that we are expecting as part of our business growth. So a big part of that is making sure that, we get that quality upfront, and, we can stand up to the business and say, hey, we have a platform that meets what you're looking for, and now it's up to you to, or up to us to work together and deliver the numbers. So a lot of calls, seven or, not my problem kind of situation is something absolutely I relate to. But, going forward, I think a lot of things is going to change, right? Meaning, as we start doing significant API integrations, and, most of the systems underlying will become very standardized. So you will use the same typical low code, no code, or standard platforms. You will use the same, kinds of Karza or, economic API. So the differentiation that NBFC will bring will slowly shift to the kind of intelligence they bring on the back of their data. So how smarter is my decisioning model? How quicker am I able to use the data to make a decision? How can I use the data to make a better rate call? All that will become a differentiation, because the underlying tech platform over time, my view is, will get more and more homogenized. So that's going to be the key, that on one hand, how do you tap onto data, and how do you then bring efficiency in terms of maybe better RPA and better automation to drive OpEx related input. So that's an area where I think the tech team can help to say, we help you bring that efficiency into the business, and that helps you compete better in the market. So that's going to be the way forward in my view.
Great. So maybe we recently had a vision workshop for our next 5-year roadmap. So we were actually, one of the good statement we heard in the statement was one of the employees stood up and said, if a CAO can have his coffee at his coffee time, and if his lunch on his lunch time, I think you guys can do it fail-proof. That is what is the vision you should ideally drive. So I think that is what we are working towards. Right. So maybe Balaji, what is your roadmap, and what is the ask from the technology industry? What do you want to move next?
As rightly told, like the no code, low code, whatever I take the cue. But if I take the cue from whatever the stalls outside, okay, 2 things comes very clearly. One is like NBFCs are no more a sales-driven company, because if you open the tab, you can start distributing. The disbursement keep happening because everybody has got the platform, AIs are there, ML, everything has been built in. So within few minutes, because people are kept on improvising algorithms, various APIs are there, integrations are there. So I think no more a sales company, because we can able to disperse it immediately. But where I see the challenge is collection, because because NBFCs are collection-based companies. Because if you're not getting collection, then certainly like sales will get impacted. It's a kind of a vicious cycle. So more and more technologies will come in kind of collection, because today itself, if I see the stall, more of collection-based products are there. So I believe collection-based, lot of technologies will come into play. Then second thing, if I see like everywhere the DevOps is there, containerization, everything is there from the start standpoint. So I think this is the second technology which might come into the future. So these are the things we are adapting also. So I can able to correlate the based on the stalls here. So these two things I believe like from a DevOps standpoint to a containerization standpoints, a lot of innovations are happening there. And the third thing what I see is people are coming up with the super apps. Like if you see from Tata to everybody, if you see, everybody has a kind of a Reliance, everybody has a kind of a super app. Previously, they started building point by point various apps were there. Now everybody is trying to make it as a super app. This is the third thing which I see it right now in the NBFC vertical. Thank you.
It's interesting. In fact, everyone would be tempted to tell something in some forum, right? So we were behind Tata New launch. We were behind the largest AU Finance super app launch. We are going to be behind 2 large banks and 1 large NBFC super app launch. So thanks for the lead, so that I'm happy to convey that in this forum.
Sales call is done.
Yes, Jit.
So I have a good friend of mine, Bhavin, who's actually also the co-founder for Spocto. Spocto is a group company of ours. It's owned by Credit Avenue, and Credit Avenue is part of Vivrti Capital. You should hear him speak because they have about 70% share, and Bhavin should be in the audience. You should hear him speak. Spocto does some very cutting-edge collections related work, and they have a lot of retail share today with banks and NBFCs. So as to his point, right, it's very easy to disburse. Anybody can lend money, but not everybody can collect, right? So very interesting offerings from Spocto. Do spend some time, that's going to be interesting as well.
I have something to add because I've got 25 projects. So lot to be offered to the fintech partner vendors and all. First thing is that we don't have big pockets like banks, am I right? Universal banks or MNC banks. We are NBFC. So first thing is that partners should be innovative. Like CIO role or CTO role is not no more a CIO or CTO. It's a Chief Innovation Officer role. Ki budget kam hoga, but delivery badegi. Means you have to do more with less. Am I right? So my request is that we're getting into an OPEX model. Like we are coming up with one of the partners, like which group will be knowing that BPS model means when I scale, I do this business, I'll pay you this. Am I right? Upfront, that's pay 3 CR, 5 CR. That's not going to fly. So that is out of the window. So the fintech partners, the vendors have to be innovative. The OPEX model. Third is speed. Speed is very fast. Means speed requirement is very fast. Means I know there's an irony which is going on in strictly BFSI CIO group. The decision will take 1 year, but they want that thing to be implemented in 1 week. Means IT will get 1 week, but decision took 1 year. So that is the irony that is going to stay, am I right? So that is the where means I used to say that to my IT guys, जहाँ लोग दूसरे डिपार्टमेंट की सोच रुकती है, वहाँ हमारी सोच चालू होनी चाहिए. Means that's how expectation from IT is, am I right? So technology, analytics, we have done wonders because we have done 2,000 hours of manual save because I said that we have to automate and we have to digitalize, we have to do the journey. And I said there's nothing to lose. We have already the rock bottom. यहाँ से ऊपर जाएंगे. Means the journey is breaking 5 times. We do something good, it will break 3 times, then 2 times, then 1. In that way, we have done a drastic improvement in automation, digital and all. And with this, I think 5 or 6 of overall hygiene plus strategic projects done. Remaining, I request all the vendors who are working with NBFC. NBFC is a huge market. I was studying that there are 9,857 NBFCs. Banks won't play with the startups or mid-level players. They will play with the big players. Am I right? There's a joke in CIO group, global CIO group, that I will not get fired to hire IBM or Finacle. Am I right? So NBFCs will take risks because we want to do better, faster. Means and also I have partnered with my team, that departments. I say IT. I said हम तो मतलब बदनाम means we are not delivering. That's what given you assume that. But now it will be better. So what I told is engage, not escalate, collaborate, not conflict, and partner to progress. Am I right? There's no point in IT giving an ultimatum. I said IT should have a seat on the table. Am I right? When some decision is taking that sales agency is gone, this needs to be developed in 5 days and given. I said, who will do it? Means you have to, I should have a seat on the table, or my BSG head or dev head should have a seat on the table when you're making that decision, am I right? It cannot be one-way journey. So that's the IT is evolving to have as equal importance, because I used to work with one of my past bank head. He used to say that CFO mera bill hai or HR mera dil hai. तो मैंने बोला IT क्या है? बोला हाथ पाँव है. Means you will work and CFO and CFO. So we are the hands and legs. Means anything moving, because I still read a very good book of from Harvard. It says that IT is the health of the organization and sales is the wealth of the organization. If the health doesn't improve, wealth will never improve. Am I right? So IT, and in my past 2 assignments, IT never used to have a AOP cap. It's like you go and justify, the money will come. NBFC is not like that. And that's the very gentle and humble request to all the players is that, all the vendor partners is that get into OPEX model, come up with an innovative pricing that once we achieve that 2,000 crore disbursement, 3,000, we will pay accordingly. That will fly. And all they will get humongous amount of business from NBFCs and fintechs, because fintech partners are growing big way. And the next name of the game in lending business is partnership, fintech partnership. Thank you.
Thanks, Vijay. I think I personally have quite a bit of a learning from you all, what you are looking forward for, right? So thanks for all your time. I think to be on a lighter note, banks also is not giving money to us. They also they are also asking us to provide an innovative way coming out with the OPEX model, right? So thanks for your time, right? I think we'll continue to some of the insights which you gave for future, I think is the takeaway for us today. We'll come back on that, right? Thank you. Thanks.
Well, thank you to the moderator and thank you to all the panelists present here. And now may I request Mr. Sundarajan sir to kindly felicitate all our panelists one after the other. And to begin with, may I request Mr. Balaji TK, Chief Information Officer, Orange Retail Finance Limited, to kindly come forward. And may I request Mr. Sundarajan sir to present him a memento as token of gratitude and respect. Can we all give a huge round of applause, please? Moving next, may I request Ajit K. Menon sir, Vice President and Head of Operations, Vivriti Capital, to kindly come forward. And I request Sundarajan sir to present him a memento as token of gratitude and respect. Following this, may I now request Mr. Vijay Kumar Ramakrishna, CTO, Clicks Capital, to kindly come forward. Please, sir. And may I request Mr. Durga Prasad Swaminathan, Chief Information Officer, to kindly come forward from Cholamandalam Investment and Finance Company Limited. And yes, it's going to be vice versa. Now may I request Mr. Durga Prasad Swaminathan, Chief Information Officer, Cholamandalam Investment and Finance Company Limited, to present a memento to Sundarajan KD, Vice President, Sales Quality Kiosk, who has been the moderator of this panel discussion. Thank you, sir. And thank you once again to all the panelists here. Okay. I request all the panelists and the moderator to kindly join for a picture. Thank you. Thank you once again. So moving forward, may I request Mr. Aman Kajaria, Senior Director and Head NBFC, SKET AI, to kindly present on the topic, The Future is Here, Transforming Collections in NBFCs with Voice AI. Please, sir.
Check. Hello. 1, 2, 3, 4. All right. I think, can you hear me loud and clear? Yes? Okay. I think that was one of the most engaging sessions, at least, that I have come across. And the context that I was supposed to carry, I think, has been set. NBFCs are a collection company, right? And today we're going to be talking about, some technologies that we sort of enable these NBFCs with to solve this humongous problem. So I'm sure collections is a process all of us did, and I'm sure you would have, if you're interacting with NBFCs or if you're a part of NBFCs, you would have seen some of these slides very often. You would have heard about, pre-dues, bucket X, bucket 1, bucket 2, very often, right? And what are the challenges in collections? I mean, just to sort of, summarize in maybe 2 or 3 sentences, the scale at which you can collect money is a challenge. The cost of collection is a challenge. Hiring, managing, scaling up, scaling down, firing agents are a challenge. And then connecting with the customers in the language that they prefer, at the time that they prefer, sort of just personalizing all the collection campaigns to the customers becomes a bit of a challenge. So for a minute, I'm just going to park this challenge here, and I'm going to talk about And another trend that's emerging somewhere else in the industry, voice. What's happening with voice? Today, most of the platforms that you interact with, the likes of Amazon Alexas, your cars, your mobile phones, your IoT devices at your home are all now powered by voice. And if you look at the what's happening in the global landscape, 5 out of the 5 largest technological companies today, the likes of Samsung, Apple, Microsoft, all the others, like the 5 companies, all investing in voice technologies like Google Assistants, Alexas, Siris, and so on and so forth. On that note, let me just show you a small video on one of the applications of voice AI. Can we play the video, please?
Where you been? I've been trying to call you all day.
You have reached your ex-girlfriend's line. Kindly
What?
state your inquiry.
Ex-girlfriend?
Yes, this is Neha's customer care provided by Skit AI.
AI, you're using AI to break up with me. Okay, come on, Neha, stop
I'm
this.
more effective and efficient for seamless breakups and other hard conversations.
Hard conversations. I'm great at hard conversations, okay? I'm so easy to talk to. First of all, Neha, if you break up with someone, have the decency to at least call them or send a message.
Message from Neha. It's over.
Wow.
Thank you for calling Neha. Say 1 to
Wait,
get
wait.
back. Say 2
One,
to
one,
move on.
one.
Thought as much. You are now blocked.
Hello? You know what? They say your best friends are there for you, even if your girlfriend breaks up with you using AI. Rampal, okay, you won't believe what Neha did? She breaks up with me. Guess what? Using
Hello, you
AI.
have reached your ex-best friend's line. Kindly state your inquiry. Kit, transforming customer experience with voice AI.
Who's saying that?
So yeah, that's one of the use cases of voice AI. But no, that's not what we do. Let me just play one more audio to show you what we really do for NBFCs and collections. Can we play the next audio, please? Excuse me. Can you play the next audio? Okay.
नमस्ते, शिश बात कर रही हूँ। क्या मेरी बात विघ्नेश सावंत जी से हो रही है?
कंप्यूटराइज आवाज बंद कर पहले और किससे बात कर। हेलो, किससे बात कर रहे हैं यार?
हेलो, बात कर रही हूँ। कृपया बताएं क्या मेरी बात विघ्नेश सावंत जी से हो रही है?
किससे ही हो रही है? किससे बात कर रहे हैं? अरे कोई पूरा पेमेंट कर दिया।
अच्छा, क्या मैं जान सकती हूँ आपने कब पे किया था?
4 तारीख को सेकेंड EMI और थर्ड EMI करने का है, वो अभी अगले मंथ में जून में।
ओके, मैं आपका पेमेंट हमारे सिस्टम में चेक कर लेती हूँ। अपडेटेड पेमेंट स्टेटस के बारे में हमारे एजेंट्स आपसे जल्द संपर्क करेंगे। अपना महत्वपूर्ण समय देने के लिए धन्यवाद।
Okay, so what you heard there was not a person, but a piece of technology or a voice AI or a voice bot, as different people call it, talking to the end user and asking them to pay the money. And if you're not comfortable with Hindi, I'll just sort of help you, I'll translate that for you. What the customer said was that he's already made the payment, and the technology then asked the customer to confirm by when he had made, and then sort of, goes to the backend systems, fetches the information, and also, in the process would pass it back to the customer to check whether or not the payment has been received. So that's essentially what voice AI can do for a industry like NBFC or even banks and credit cards for that matter. So that's what we're doing at Skid.ai. We are enabling collections and a lot of other use cases for NBFCs. Who we are a company that was born and sort of brought up in India, started from Bangalore. Very recently, we have moved into the United States. We handle close to 6 million calls every single day. We've raised about 30 million in funding from some of the premium venture capitalists out there. And while this slide slightly shows some older numbers, today our team is about 400 plus members strong. And we work with more than 50 plus enterprises. If I have to, without naming them in the interest of NDAs, 3 out of the 3 largest banks, the largest airline, the largest D2H provider, 4 out of the large 5 general insurance companies, 3 out of the large 5 life insurance companies, so on and so forth, already work with us on a various range of applications across customer service, collections, lead qualification, so on and so forth. So that's a little about us. So like I said, across the customer journey in these NBFCs or across the call centers or during any customer life cycle, right? The pre-purchase, acquisition, customer service, and retention, voice AI can today add value across the journey. It starts from, like I said, lead qualifications to welcome onboarding the customers, to you saw the demo on the debt collection, to even, cross-selling and upselling to your existing customers in the space. Quickly, what are some of the USPs that we stand for? We can go live in less than 2 weeks. So today, if you decide to go live with us, we come with already a marketplace system where we have integrated with some of the most common SMS, payment gateways providers, WhatsApp providers, and so on and so forth, to just give you an out-of-the-box deployment with less than 2 weeks to go live. Why is contactability important, and how do we solve for it, right? Now think about it. If the customer on that call had said that he is not available right now, and if he asked the machine on the other side to call back tomorrow at 9 in the night, right? The problem there is, one, in that language that the user prefers to speak to that enterprise, you need to arrange for those agents and arrange them for them at 9 p.m. in the night. Technically speaking, this technology can work 24 hours a day. Of course, you would not call the customers in the midnight, but then this can sort of work any time of the day. It can work in about 10 plus Indian languages and sort of, just interact with the customer at the date, time, language, and whatever personalized context that they prefer to talk on, which today is very difficult for an agent or any other sort of touch point to do. And of course, in terms of the technology, we have our in-house technology to support all of this end-to-end. These are just some metrics that I want to touch upon without dwelling into detail in interest of time. But we have a booth outside, and you can just come to us. We have a team there, and we'll probably take you through all of these metrics in a lot more detail. But just to give you, in fact, this is not what we're saying, but this is what the customers are saying, where 50 to 70% of their collection, again, depending on the buckets, can all be solved just using the voice AI process itself without the need for having manual agents. And so you may say, Aman, okay, all of this is good, technology is good. How do we go about it? How do we sort of use it? One, of course, we can work with you to be a managed service partner and manage all of this end to end. But also, we give you the flexibility to do all of this end to end. With our DIY builder platform, you can sort of use it, build and configure these bots using drag and drop. There's a demo outside waiting for you in case you're interested. You can test, you can deploy. You can test, deploy, listen to the conversations, pretty much everything on the same platform, and then also monitor not just the call metrics, but also your business metrics in terms of when did the collections happen, when in the cycle did they happen, and also learn about what time of the day are the customers really, sort of engaging with you, what time are they paying, in more detailed analytics that we bring to all our customers. With that, I just want to sort of, keep it short and wrap it up with maybe one last audio that we wanted to play for you. Yeah.
नमस्ते, जी से कशिश बात कर रही हूँ। क्या मेरी बात विकास तोमर जी से हो रही है? हाँ। जी, आपके जी का 3,941.0 रुपए का EMI पेमेंट 10 मई 2022 को ड्यू है। इसके लिए आपको अपने बैंक अकाउंट में पर्याप्त बैलेंस रखना होगा ताकि समय पर पेमेंट हो सके। क्या आप बैलेंस मेंटेन कर पाएंगे?
मैम, मुझे 2 दिन का टाइम मिल सकता है। मैं बीमार होने के कारण नहीं कर पाऊंगा।
क्षमा करें, हमने आपको दुखित घड़ी में संपर्क किया है। क्या आप मुझे दोबारा कॉल करने का समय बता सकते हैं?
आप मुझे कल कॉल कर सकते हैं?
जी, कोई बात नहीं, मैं आपसे बाद में संपर्क कर लूंगी। आशा करती हूँ आपके यहाँ सब जल्द ठीक हो जाए। अपना महत्वपूर्ण समय देने के लिए धन्यवाद।
Thank you.